And we're live, everybody. Welcome in. It is Tuesday, July 23rd, 2:30 p.m. Central. We are live for Tesla earnings. I am joined with two wonderful dudes, and there will be more people joining us here shortly to talk about Tesla's earnings, their second quarter. I'm joined here by Mr. Matt Smith from rebellionaire.com. I botched it. It's okay. And then Hans from And then Hans from C. Nelson on X, also Hans C. Nelson on YouTube, and that was also my co-host for our Friday and Tuesday podcasts. Cool. All right. So exciting time if you're a Tesla investor. If you follow Tesla closely, this feels like Christmas every time. We'll start with Matt because, I will concede. Matt has been, and we have Emmett as well, Emmett Peppers. Welcome in, Emmett. Matt has been kicking my ass in chess for the last couple weeks, and it hurts a lot, but I'm a man of honor. So I will allow Matt to go first in this panel to share his thoughts about what he expects from Tesla, and I will just try to swallow my pride and cry. So go ahead, Matt. What are your thoughts? And then we'll go around the panel.
Camera's off for you, and I'm just remembering, actually, I know Emmett was into chess, I think before you and I were even, so I'm kind of curious. Emmett would probably kick both of our butts, but I haven't played a game against them, so maybe we got to put that in the works too.
We should.
I'm happy to play
so
you guys
what
whenever.
We actually interviewed a chess grandmaster on our channel at one point, and that was a really fascinating conversation. But yeah, in terms of Tesla earnings this quarter, I mean, the big news everyone's well aware of is the energy deployments, increasing 136%. I think it was sequentially. So the huge increase in deployments, and then to what extent will that impact revenue? So I've been of the position that due to revenue recognition kind of practices with Megapack, that you're going to have a very big increase, but not quite 136%. So, my expectation is that Tesla Energy is going to contribute a lot to gross margin and earnings per share this quarter. I do think we're going to see an increase in gross margin. Like I'm expecting around 27% gross margin in Tesla Energy. Be very interested to see where that shakes out. And then on the automotive side, I think it's going to be a somewhat quiet quarter. I think the one thing that I did highlight in my post on earnings was that with the $99 subscription option, I think it's very likely that we're going to see the outright purchase take rate of FSD to decrease. And so I think that's going to actually be a net drag on earnings. I think you're going to have less full self-driving revenue, even though Tesla doesn't actually disclose that. It's something I track in my models. And I think we're going to see a bit of gross margin pressure on the auto side because you're going to see more people opting for subscription rather than the outright purchase. And that kind of hurts the short-term financial performance.
Okay. Emmett, what are your thoughts? What do you expect? What do you see coming out of Tesla's Q2?
Yeah, what I'm looking for is any indication of the success of full self subscriptions, the take rate. And in the past, it was, 2% or something, terrible. But now I think Elon commented is substantially higher than 2% or something in a Twitter reply. And so was it 5%, 10%, 20%? I think I'm looking on those take rates. I think that's what's missing from the production and delivery report surprise, which was a nice surprise with the Megapack and the energy storage. But I feel like there could be another surprise with full self-driving, take rates. So I'm hoping the optimistic side is hoping that there's some indication there, but I don't expect it necessarily, but if it happens, I think it could be a nice way to, help shift the narrative towards Robotaxi, capabilities soon.
Okay. Hans, what do you got?
Well, I'm definitely looking forward to hearing any updates on the progress of the supercomputer cluster that's going on there in Austin. With the rollout of 12.5 and the fact that it seems to be focused with hardware 4 vehicles at first, there's a possibility that that is a model that was designed specifically for hardware 4 to begin with, which does kind of set up the question, okay, Elon said that that's what that cluster in Austin was supposed to do. So is that complete? Is it online? Are they getting, good training cycles out of that yet? That would be a big piece. And then just continued commentary on 12.5 and then the future of FSD, which, I mean, we've gotten a lot of information really over the past 24 hours on that. So I would assume that part of the reasoning for the timing of the comments that were made is actually the earnings call today, that they're ready to be a little bit more public with some of this information. And so hopefully we'll get even an additional set of color on that as well.
Yeah, I generally agree with all the comments here. I do think the energy story, I mean, it's something, I mean, Matt's been on my channel, like, it feels like 7 times to talk about how energy is like ready to like go. But it seems like we're finally at a point where something's got to give at some point. We're not really sure how material or big it's going to be. But if you're going to increase the amount of batteries you're deploying by 2.5 times quarter over quarter, the revenue has to be somewhere. It might be delayed till later, but it should be recognized at some point. I do wonder, so one of the stories on the automotive side has been sort of this waiting for the cost savings to kick in, waiting for cogs to be recognized a little bit lower from some of the peaks we saw in COVID, some of the improvements from the Highland platform in Model 3, Model Y being at full ramp, sort of cost stabilizing across the supply chain. Do you guys think that's going to be material this quarter, or do you think that's not really part of the equation, or do you foresee this being a thing in later quarters, or do you think that ship has sailed? I'm curious how you guys are thinking about cogs in respects to the auto business. Maybe Matt, if you want to go first, if you have any thoughts.
Yeah, I mean, it's not like there haven't been improvements. I mean, if you look historically, they really have done a pretty good job of bringing the cogs improvements down. A big piece of that also is that lithium prices have come down. So like the cell supply cost has really decreased pretty significantly, and that's led to a pretty nice cogs savings. I think there was a comment, I forget exactly how it was worded, but on one of the recent earnings calls where there's not going to be major step downs in cogs from where they are right now, but it's more like kind of sequential, like modest improvements. And so that is kind of my expectation that, we're not going to see like $1,000 shaved off cogs anytime soon because of like supply chain or removing the ultrasonic sensors or anything like that. So I think most of the kind of low-ish hanging fruit is probably picked up by now. But I think there's like small benefits, like Cybertruck ramping is one I've heard a lot of people talking about, and sure, that will help, but the volumes are still like so low that I think when you kind of aggregate it into the level of a quarterly earnings call with 440,000 deliveries, the savings in Q2 relative to Q1 is actually going to be pretty de minimis. So I think that'll continue to help going forward, but then you're going to have ASP decreases on Cybertruck in particular. So small, modest improvements is kind of my expectation.
Yeah. Any other thoughts there from Emmett or Hans? And then we'll have Nico give his full thoughts here since he just joined. Go for it, Emmett.
Yeah, I would just say the cogs, I'm not as focused on anymore. I think we're transitioning from an automotive EV manufacturing towards, it sort of needs to outgrow that narrative to get to a new, $1 trillion valuation again. And it needs to transition to AI, self-driving, a company of the future, robotaxi stuff. And so I think this might be one of the last earnings calls, if not the last, really focused on automotive gross margins, for example. I feel like that's still important, but I feel like in the quarters to come, that's going to be less important relative to everything else.
Got it. Nico, you just joined us here. Any overall thoughts for what you expect out of Q2? What are you expecting?
Yeah, let me get a mic check real quick.
Beautiful, as always.
Perfect.
It matches your hair.
Good, yeah. I'm growing it out. I'm in an awkward phase. Don't judge me.
Teenage.
Yeah, exactly. No, I'm sure I don't really have anything of value to add other than what's been said. Top of mind right now is 12.5. Hans knows I was up late last night. Omar sucked me in with his commentary, and then there's all this supposed rumors about Biden, all this stuff, and I was like, all right, well, I guess I'm not sleeping tonight. So yeah, 12.5 is what's on my mind.
Yeah. And so 12.5 for those that are not familiar, which I'm sure 98% of the audience is, but this is the latest release of full self-driving that just came out, I believe, overnight or late last night or early this morning. We've seen some users in the Tesla sort of community with AI driver, which should be with us with Hans and I on Friday. So we'll see if he's got confirmation there. And Dirty Tesla, Omar, a bunch of other folks have gotten the release. And the feedback that we're getting so far is that it's by far the smoothest, by far the most confident, by far the one that feels the safest. We've heard these before, right? From all of us. There's always like a step change, it seems, with some of these, but it does seem there is quite a drastic improvement from 12.3 and 12.4 to 12.5, and yeah, we'll see if that ends up in the P&L. You know, we've talked before on this channel that from my standpoint, I don't really see the market valuing Tesla as an AI play until they can start dropping profits to the bottom line through FSD and through Robotaxi. I think they are going to be in this sort of limbo phase of being range bound, let's say, from a price perspective, until they can prove to the market that there are profits in their technology. So not sure if anybody has any thoughts on that, but that's kind of where I'm at.
Yeah, I mean, sure. It's just because you panned to me. I think, you know,
You went off mute, bro.
I fundamentally disagree with what you're saying. I think Tesla wouldn't have this valuation if people weren't valuing it at some degree from an AI FSD play. I don't really think Wall Street is in the stock at all as a car company at this point. I think that almost the entire reason anyone's really in it at this point is for Robotaxi, is for FSD. And I think you're just going to see more and more of that. So while I don't think it's the full valuation of, you know, what you see like NVIDIA, for example, where they're really getting recognized, because to your point, the profits are being recognized and we can actually put them on a spreadsheet. I do think that they're being recognized for it and they're getting a lot of credit for it right now. So that's my take. And that's really all I care about on this earnings. I could care less about everything else. We need profitability. The car company or car part of the business has to be good so we can keep funding everything else. But that's like not even the appetizer at this point to me.
Matt, what do you think about that? Do you agree with that sentiment that the stock is already pricing a lot of that AI stuff in, and if they make improvements to FSD that are not yet waiting for profits to drop to the bottom line, that the stock should respond?
Didn't say a lot.
Fair enough.
Yeah, I mean, so I think when we were sub 200, it's kind of very easy to say that, you know, FSD is excluded from the valuation. Just if you're kind of looking at the earnings potential of the kind of core car business plus the rapidly growing energy piece of the business, which to your point earlier, Farzad, we've been talking about how energy is going to be really big and going to be fueling growth for a long time. And it was like boy who cried wolf a little bit. And now we finally are there. We're like, I think we're going to do over $1 in earnings per share on energy just next year. And it's gonna grow from there. So just with like the car business kind of in the funk that it's in right now, you're gonna get back to like a strong like earnings growth profile where you can justify the high PE that Tesla has on the back of the fact that, okay, we're returning to growth and there's like a very solid, believable growth story there. So I think if you kind of put that piece of the pie together, still, I think there's a little bit of kind of upside from FSD and Tesla as an AI play inherent in the valuation where we are now at, what is it, 750 billion-ish market cap. So I would say, like, my point of view is it's certainly not fully baked in that like the market believes that Tesla's going to solve autonomy and robotaxis will be a thing. Even the kind of the interim step that I've talked about a couple times before, even if you don't believe in robotaxis, there's a lot of upside potential just on selling more FSD subscriptions and that kind of business model I think is going to be really compelling, especially once it's launched in China and Europe. So I think with where we are right now, there's way more upside if the market sees kind of credibility that the path to autonomy is actually really close. Like if the broader market believes Omar that Tesla's software as it stands today is better than Waymo and Cruise and that sort of thing, like there's a lot more upside I think that could be realized. So I think we're kind of in this stage where like Tesla's getting partial credit for AI and it's like very partial credit, I would say, at that.
Hans, do you have any thoughts on that, on the whole discussion here with being recognized as an AI play?
I mean, it's definitely one of those things that you see all the fundamentals, all the things that they're doing, whether it's having data at scale or whether it's having these large clusters to do training with. And it, anyone who's paying attention to what I would call leading indicators would say that, okay, they're doing R&D in all the right places. They've got infrastructure in all the right places. Like they have all of the components necessary to be a huge AI play. And there are pockets of smart money where you do see this recognition. I would say the BG2 pod is an example of, Altimeter Capital run by Brad Gerstner and then Bill Gurley really have looked deeply into FSD, and they have had a lot of positive things to say about version 12. And especially like Bill Gurley is one who's very skeptical about the return on capital that is going to be necessary to justify some of the expenses that have been laid out, or the capex that has gone into this whole AI infrastructure build out. But he kind of reserves his critical comments in that area when he looks at Tesla and their spend and their potential to make revenue on the back of that. So I would say there are some people who are smart enough to look in the right places and see it. But yeah, as far as the broader market, I think that's where you would go to a Gary Black and use him as kind of a bellwether to say, okay, what does the rest of Wall Street kind of think about this? And it's generally not great. So, but that's just the way that they are. They want it to be proven. They want show me. And so while we're waiting for the earnings to really show up, I think that for the most part, it's highly discounted. And, we've seen with the drop in unit sales of automotive, a large drop in stock price. And so I think for the most part, it's an automotive centric story and an investment thesis for most people. But hopefully we can change that here going forward in the next 12 to 24 months.
Before I go to Ahmed here, let us know where you're tuning in the comment section below on both YouTube and X. We're live on multiple channels. We're live on mine, on Hans, on Nico's, both X and YouTube. There's also a lot of other creators in the Tesla community, Herbert, Peggy, Rob, countless others that are live streaming as well. Just pull up everyone's live stream at the same time and just unmute the one you want to listen to, or if you're really hardcore, leave them all open and see what happens. Just have everybody talk at the same time, and then you'll get everyone's knowledge at the same time. That will definitely work. Emmett, any thoughts on this AI discussion valuation?
Yeah, I mean, Tesla is going to be the leader of the real world AI economy, and I'm becoming increasingly optimistic about the stock price, just because my thought is the stocks never to move in line with a business. It's either way early or way late. Like, when Tesla started producing the Model S originally. Let me take off this headphones for a second, see if that helps here. Volume.
Yeah, that we're struggling a little bit to get your audio to be normalized. It seems
better?
softer than. Yes.
Is that better? Can you hear me?
It is better to us. Yeah, it's better.
Okay, good. Sorry about that. So I was starting to think that the market is usually way early or way later, to the valuation of what the business substantiates, and I am becoming increasingly optimistic that maybe the valuation of the stock will become way early to what the business of Tesla is ultimately going to become, probably in the next year to 18 months. And so I'm becoming sort of increasingly optimistic on the actual stock price with the AI narrative kind of gaining a foothold. I will stop there and try to change my settings of my volume. So I apologize for that here.
No, you're probably, we can hear you. It's just, we're struggling to get you to be level. You may have to do it from your side on the settings on the little cog on the bottom of StreamYard. Under audio, you should be able to turn off auto volume settings, and we should be able to set your volume from there.
Okay.
In theory, we'll see. Okay. Cool. So Tesla earnings will drop here in about 10, 15 minutes. There will also be a call at, I believe, let me see. Let me just verify the time. It will be at 4:30 p.m. Central, 5:30 p.m. Eastern. So about an hour and a half after earnings drop. So what we'll do is we'll review the earnings live on this channel. We'll also analyze them. Shout out Steve Jobs. And we'll analyze them, and then we'll also do the call live right on this channel as well. And then on this channel, we'll also do whatever you're viewing this, we'll also do live notes. So we'll have a file here that you can read as you listen to the call. And this is something that I know has been helpful for people in the past. And we'll do that for y'all, no problem. So, okay. Anybody want to guess, how do you guys expect the market to react? Do you think Tesla will beat? Do you think Tesla will come under? Does it matter? Any predictions? Any crystal balls? Who wants to go first? Emmett ran away. He doesn't even want to answer the question.
I can jump in. So yeah, I put out my estimate earlier today. I'm at 59 cents adjusted earnings per share. The street consensus is at 62 cents, so I'm a little kind of below. I was looking at the rest of the retail community. There was this guy Farzad who had like 95
I
cents
adjusted it.
there.
I adjusted it.
When you realized how dumb you were, you pulled it back.
Yes. 67. I'm at 67 adjusted.
I thought you were 57. Okay. So, but like most of the
57
the
gap, non-adjusted.
Oh, okay. All right. Like most of the retail analysts are kind of in the like 61 to 65 kind of cent range, which frankly is not that much different from where Wall Street is. So I think the number is probably not what matters more than anything. I think it was like the Q3 call last year where we had depressed Elon Musk show up, and like that was really bad news for the stock, even though the numbers were kind of fine. In most recent quarters, like it's been kind of upbeat and cheery, and they've been saying some good things. So I think kind of tone and outlook are probably what's going to matter more than the individual number. That said, I do think Emmett was kind of hinting at this earlier. If we get some additional disclosures around FSD subscriptions or take rate or any kind of interesting nuggets around that I think could be meaningful in kind of moving the stock one way or another. So that's kind of how I'm thinking about it.
Anybody else want to throw their 2 cents? Hans or Nico? Hans doesn't want to touch it. Nico?
No balls. Yeah, I'll say something. Why not?
Yes.
Yeah, I think this will be completely irrelevant on anything that you're going to see on the income statement. None of the numbers are going to matter. I think this is all going to be based around what they talk about, the narrative with Robotaxi, the events, how things are tracking, and any commentary about the next generation vehicles. I think that's this whole earnings call is based on how they talk about that, and that will determine the outcome. And if they say everything really good, my anticipation is that the stock will actually be flat, like maybe up $1, maybe down $1, but I anticipate it being flat if they say good things in general.
Okay. Looks like we have Emmett back. Emmett, do you want to give us your prediction on what you expect? Crystal ball, what do you think is going to happen here once Tesla reports?
I'm very uncertain. I think we could move up substantially higher in the coming weeks, but I wouldn't be surprised if we drop. I don't know. I'm uncertain, but I don't think it's going to be a sell the news type event. I think the momentum has shifted for Tesla stock, and I'm just more increasingly optimistic on the general direction of the stock for the next few quarters. That's just my prediction here.
Yeah. I think I agree with what Nico said, where if they have a really good report and it's like an upbeat call, not much is going to change from where we are today. I do think that we're going to get like optimistic Elon instead of depressed Elon this time around. I think one of the things that I've observed, I don't know if I'm sure y'all have noticed too if you follow the story closely. And by the way, for those that are joining us, earnings should drop here in the next 5 to 10 minutes, and we'll track those live with y'all. Is that there is a trend of like how he is on X and what his interviews are like before the call and the actual call. It's almost like you can predict what the vibe's going to be based on how upbeat he is on those interviews. He just had an interview with Jordan Peterson yesterday that was live streamed on X, and they spoke for 2 hours, and he seemed, Jordan Peterson also talked like 80% of the time, which is fine. He has every right to do that. It's his podcast. I thought it was a good discussion on 2X. Hans gave me that recommendation. But yeah, I thought he was in a good mood. He's been very active on X. He's been joking around. And I know some people like following the stories like, wow, this is like you're like reaching here. But like I encourage you to go back and sort of look at the vibe before the call and then the actual call. You can kind of predict in a way what kind of Elon you're going to get. And we'll see. We'll see on this call what kind of personality we're going to see. I think we're going to get an upbeat Elon, which has been good for short term. But I think the overarching premise here is that it doesn't really matter long term. It's all hinging on progress with their AI play. And even on just in that interview with Jordan Peterson as well, one of the comments that was made, again, this is sort of like the rebranding of the story, let's say. It's a AI company disguised as a car company that was mentioned on that interview that has nothing to do with Tesla. So a lot of investors that have been following Tesla closely for a long time, I think, are probably very encouraged by some of the signs they're seeing out of the company, the rhetoric, so on and so forth. So,
hey, Farzad, a question for you. Do you still stay in touch with any of your former colleagues at Tesla? What's kind of the sentiment around, the morale and the company, if so?
Yeah, great question. I do. I very much do. Ever since he did the layoff, there's been a fire under people's asses that was missing for maybe a year or two. That was some of the quotes that I heard, is that some of the I don't want to say that maybe the teams were complacent, but there wasn't that same level of fire because there was a sense that there was a little bit of like bureaucracy had crept in some places that shouldn't have been there. And while I was at the company, I noticed that myself during the Model 3 ramp. One of the things they said is like we need to get rid of all the barnacles. Remember that whole barnacle thing? There's a lot of barnacles on the story. We need to get rid of them. I noticed a very dramatic shift on how quickly things moved after that. They went from like fast to like light speed. And sort of that's what I'm hearing from my friends that still work at the company. They just say that the vibe has shifted. It feels a lot more startup-y. Sort of that do or die culture that made the company so great in the past. Not that it was missing, but it was just amplified after those layoffs. So it's very positive, truly.
Yeah. And did you guys see that recent article about the 4680 batteries kind of seeming to get past some obstacles? And it's coincidental that Drew Baglino, left, and a few months later they seem to be able to kind of innovate out of the obstacles they were stuck in. Sometimes you just need a change of leadership in certain roles, I feel like, to really make things move forward.
Yeah, I think that points directly to that. I mean, I know Drew was a phenomenal asset for Tesla for a long time, and I'm sure he still was, up until the day he left. But I think one of the things that is lost about the Tesla story sometimes is that the way they can replenish talent and the way they can always revitalize the mission with the same CEO gets lost. Because it's like, if you look at Elon's track record from a leadership perspective, he's been at this for 20, 30 years. And one of his prime strengths, like the thing that separates him from any other leader at that place, is that he can operate as a startup forever. Forever. He doesn't get complacent. He's clearly doesn't give a crap about being rich or having money, which is one of the Achilles heels of a lot of successful people, is that once they feel comfortable, that fire leaves. And somehow, I think I know what. I think him being on the spectrum probably helps a lot in this respect because he's just so focused on what he needs to do. He's just he has an unrelenting fire that he can't let go, and sometimes he just needs to align the entire story, everybody who works with him, to ensure that they feel the same, and that's what those layoffs do.
It also helps when it's your company, right? It's your project, it's your baby. It's a little different than when you work for someone to have that fire.
This is very true. It's a lot easier to do that when your entire net worth is tied to it.
Hey, can I ask Emmett and Matt a question? Are you guys any thoughts on the option markets right now? And are you guys doing anything? Do you have any like options that you opened or sold any premium or anything going into this? I saw the IV is crazy high right now, which I was surprised by.
Yeah, I'll go first. I mean, I have a small shorter term option bet on the bullish side, nothing substantial, but 295 strike at August expiry. But it's small. But I had a small one also when it was at like 150 that did well. So it's sort of like rolling the dice on house money, so to speak. So we'll see. But I just have a feeling the stock's kind of, hopefully, maybe I'm being too optimistic, but it just feels like the time for the stock to start appreciating again, with the narrative changing and Elon securing his vote of confidence as the leader of the company and imminently getting his share, his equity back, I'd say. So it feels, and as long as the macro market kind of holds up, which it is, it just feels more likely than not that the stock would appreciate, in my opinion.
Yeah, and part of what we do for our clients is selling covered calls. So we had that crazy week ending July 5th where that actually went against us for the first time since we've been doing that for clients. So that can be a bit painful when that happens. But the silver lining to that is that premium increases by like multiples in the subsequent weeks. So we've already made back a pretty decent chunk of the hit that we took just a couple weeks ago. And that's something that we're continuing to do for clients and that I do for myself. On the kind of longer term side, I've got my investment in Emmett's fund. And so that's kind of what I view as like my long-term kind of more option-y play on long-term exposure. So I like having that piece of it. And we do have some clients who have a little bit more risk appetite that want a small allocation to that. So kind of understand that everyone's situation is different, and it just looks like something dropped.
Well, it's like, the stocks, the initial reaction, you never know which way it's going to go, but it looks like people have gotten the news before us, the professional Bloomberg subscribers.
Yeah.
I mean, it's sort of coming back up again. You can't really tell the first few minutes. I feel like it can go spike down and spike up, or spike up and then down.
I see flat after hours right now, but down 2 now.
It's jumping up and down a few bucks back and forth. Yeah.
Yeah. We're just waiting for the earnings to drop for us common folk. For the plebs.
Another 2 minutes.
Yeah, and then once it drops, then we can discuss. So in the meantime, like and subscribe if you're enjoying the content, regardless of where you're watching it. And there's other creators as well. Pull up their streams and watch those at the same time. And mute the ones you don't like this one. Go ahead.
You're funny. As far as you had a funny post the other day on the Peterson interview. You said something like, every time I listen to Jordan Peterson talk, I need a dictionary to understand him. Oh,
yeah. Every time I listen to Jordan Peterson talk, I feel like I'm taking the English portion of the SATs.
SAT, that's what it was. Yeah. It's so true, because he'll say like certain words. I'm like, who uses that in their everyday language? Come on.
Yeah. I've been playing around with this axiomatic thought process or something. I'm like, geez, bro, just say, I have been thinking about. He's great, though. He offers some interesting insights. We're waiting for this to drop. It's flat after hours. I'm seeing only down 0.24%. And I'm still waiting for this thing to drop. So
Deck's out. I got it.
Oh, really? Oh, shit. I got it too. Okay, here we go. Let me go ahead and share screen on the deck. And here we go.
Damn you West Coast people.
Bloop. Okay. 1.6 billion of GAAP operating income in Q2 after restructuring and other charges. 1.5 billion of GAAP net income. 1.8 billion non-GAAP net income in Q2. Operating cash flow of $3.6 billion. Free cash flow of 1.3 billion in Q2. AI infrastructure capex was 0.6 billion. $3.9 billion increase in our cash and investments in Q2 to 30.7 billion. Record energy storage deployment of 9.4 gigawatt hours in Q2. Optimus began performing tasks autonomously in one of our facilities. Cybertruck became the best-selling EV pickup in the US in the second quarter. Let's real quick take a look at margins. So margins are actually, let's see. So total GAAP gross margin is up 0.6, 60 basis points to 18%. Let's see. If I look at energy real quick, energy revenue is up, doubled from 1.6 billion to 3 billion. Real quick, if I look at the P&L, I'm curious to see what the margins are for that, and then we'll look at other stuff here real quick, because I know there's a big one. So 3 billion in revenue, and then costs up to 2.2 billion. So it looks like $600 million of profit on 3 billion, which is about what, 20% margins or something. So it looks like they reported a doubling in energy revenue. Let's go ahead and read through the summary real quick, and then if y'all want to read through the details, if you have anything you want to add, we'll do that. In Q2, we achieved record quarterly revenues despite a difficult operating environment. The energy storage business continues to grow rapidly, setting a record in Q2 with 9.4 gigawatt hours of deployments, resulting in record revenues and gross profits for the overall segment. We also saw a sequential rebound in vehicle deliveries in Q2 as overall consumer sentiment improved, and we launched attractive financing options to offset the impact of sustained high interest rates. We recognized regulatory credit revenue in Q2 as other OEMs are still behind on meeting emissions requirements, which is, again, like that regulatory credit story is so interesting. So what is it at real quick? Let's check it out here. Regulatory credits is up to 890 million for the quarter. Reg credits, 890 million in regulatory credits, which kind of hides the gross margin number. So let's keep going. Global EV penetration returned to growth in Q2 and is taking share from ICE vehicles. We believe that a pure EV is the optimal vehicle design and will ultimately win over consumers as the myths on range, charging, and service are debunked. Which is a very interesting bit of verbiage there. I don't think I've ever read them say anything like this, which is good to hear. Progress continued for our AI initiatives in Q2. We reduced the price of FSD in North America and launched free trials to everyone with the necessary hardware. These programs have demonstrated success and are laying the foundation for more meaningful FSD monetization. We expect to see an increase in FSD attach rates for our fleet as the capability improves and we increase awareness of the convenience and safety it offers if it offers users, which is interesting that they haven't really shown how much it has improved already. So that's a very interesting tidbit. So perhaps it hasn't as much as we thought. Overall, our focus remains on company-wide cost reduction, including reducing cogs per vehicle, growing our traditional hardware business, and accelerating development of our AI-enabled products and services. Though timing of Robotaxi deployment depends on technological advancement and regulatory approval, we are working vigorously on this opportunity given the outsized potential value. Concurrently, we are managing our product portfolio with a long-term orientation and focusing on growing sales, maximizing our installed base, and generating sufficient cash flow to invest in future growth. Now, if we go down to the outlook portion, which is interesting, here, let's see what we got here. And so for volume, our company is currently between two major growth waves. The first one began with the global expansion of the Model 3 and Y. In 2024, the growth rates of energy storage deployments and revenue in our energy generation and storage business should outpace the automotive business. For cash, we have sufficient liquidity to fund our product roadmap, long-term capacity expansion plans, and other expenses. Furthermore, we will manage the business such that we maintain a strong balance sheet during this uncertain period. For profit, while we continue to execute on innovations to reduce the cost of manufacturing operations over time, we expect our hardware-related profits to be accompanied by an acceleration of artificial intelligence, software, and fleet-based profits. And then for product, which has changed from outlook, something that I've just noticed here. Plans for new vehicles, including a more affordable model, remain on track for startup production in the first half of 2025. These vehicles will utilize aspects of the next generation platform as well as aspects of our current platforms and will be able to be produced on the same manufacturing lines as our current vehicle lineup. This approach will result in achieving less cost reduction than previously expected, but enables us to prudently grow our vehicle volumes in a more capex efficient manner during uncertain times. This should help us fully utilize our current expected maximum capacity of close to 3 million vehicles, enabling more than 50% growth over 2023 production before investing in new manufacturing lines. Our purpose-built Robotaxi product will continue to pursue a revolutionary unboxed manufacturing strategy. Okay, so what have you guys seen so far? Who wants to go first? Toom, 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 toom.
I did see that. Oh,
You go.
I was just gonna say one note was in the outlook. They're, I don't know if it seems like they're signaling towards 3 million, capacity by the end of this year. So you could almost hope they produce close to 3 million vehicles next year. You can almost extrapolate that. Maybe it's too optimistic to think that, but it seems like it's a metric they put out there, 3 million vehicle capacity in the product outlook.
Stock's down 3% after hours, by the way.
So, I mean, the thing that jumped out to me, Farzad, you hit it briefly, but like the credits revenue is, I don't recall it ever being this high, 890 million. And so to miss on earnings as significantly as they did, despite credit revenue being so high, that kind of leads to more concerns around the quality of their kind of core earnings. So this was something that I was, kind of expecting, like as this, I led off the, this hour basically saying the FSD take rate should logically plunge, and that's going to hurt earnings. I wonder if that happened even more aggressively than we might be thinking, because otherwise I don't know how this, how the numbers are like this low, to be honest with you. So that was my first thought. And then the other thing was just on that, like the note they have about pure EV is the optimal vehicle design and will ultimately win over consumers as the myths are debunked. Like this is what we've been asking them for like years. Like, hey, a lot of people have misconceptions. Like, why don't we do some educational advertising? It's like, it just seems like the most ridiculous own goal that they haven't been more aggressive on this front before. So now they're at least putting it in their earnings report, but like, how are you actually going to debunk those myths? That doesn't just happen automatically. So I kind of hope they speak to that in the call a little bit.
Let's go, Nico. I know you want to say something, then we'll bring in Yash.
Oh, speaking of Yash.
Wow.
I'm getting my juju ready to.
There we go.
To pair with my my mezcal. So yeah, doing it right. No, I was just gonna say on the vehicle capacity for the next gen vehicle, I don't think they had various there before. And then the other thing that caught my eye was I forget what it was. Oh, well, it wasn't here. The fact that in the past we've seen them maybe not necessarily talk about like take rate or FSD adoption, but the fact that it's not here now after when kind of unsupervised and all that. It's the way everyone was talking about it in the community and on X and all that. It almost felt like there was going to be something here that was going to get broken out. I wasn't expecting that, but it definitely seemed like people knew things that I didn't know. It was kind of, I guess part of me thought we might see something broken out here about the take rate.
Yeah.
I'm happy they didn't personally, but
I feel like if they said, hey, we think the take rate's gonna go up as people realize the benefits, implies that they haven't seen it yet. So I know there was like a report out there about the credit cards showing that only 2%, it was only a 2% take rate or something. And Elon said that's clearly false, but maybe it's 5%. Maybe it's not 20%. Maybe it's not 50%, right? So maybe there's still hesitation on people signing up for that $99 trial. Yash, let's go ahead and bring you in, my Juju brother, wearing the blueberry polo. Thank you.
Dude, beautiful. I love it. I wish I could be wearing mine right now, but mine's in the garbage. I think this earnings report is pretty much on par with kind of what we thought it was going to be. I agree, Nico. I wish we got some take rate info there, but obviously that just tells us that it's not where they think it was going to be. It's like nothing to showboat about. But I tweeted this out this morning, and I can't stay on here for long, so I'll just get my point now. But we talk about EPS, and yes, it came down 10 cents or whatever it was, non-GAAP EPS under Wall Street. But I mean, that's kind of missing the forest for the trees a little bit right now. Like, and this is from me. I usually am the what's projections looking like? Like, let's talk about auto. I don't really talk about FSD too much, but it seems like this is such a front burner, short to intermediate term goal now for Tesla. It's not like this pie in the sky thing. And Farzad, we didn't get a date for Robotaxi event yet. Have we in the report? I haven't had a chance to fully read it.
Just a delay.
So I wonder, are we going to get a date, do you think, for that today, right at the beginning of earnings call?
That would be nice, but I don't know if we'll get it. I think they'll probably wait.
The last two earnings call, Elon has kind of answered the most obvious questions in his opening statements. So
fair. That's fair. I just think it would have been in the earnings report, though, if that were the case. And the stock's down, what, like 2 or 3% after hours? So, I mean, it's really not a terrible
4 or 5% now.
Okay.
Yeah.
So maybe
5.2.
It bleeds. I don't really know if there's anything Elon could say other than short of a Robotaxi recognition of revenue or something like that happening this year that might stop. It's not really a big bleed anyways. We were up 5% the other day. So 5% here or there is kind of a wash, it seems like, for Tesla stock at the moment. So all in all, like, I think Robotaxi needs to be the front burner question for everything this earnings report.
Here's an interesting graph. Global battery electric vehicle market share, 12 months trailing. They're charting China's market share of the global versus everything else but China. What's very interesting here, so China is growing, and so the total is growing here, and it's mainly because of China. But it's so fascinating to see how flat, if you look at starting at Q3 of 2023, somewhere, let's see, it's over here. Q3 of 2020, just see how flat it is. It's almost like it was designed. It's almost like it was designed for this to just stop. It's like, stop, don't make any more EVs. It's so weird. That's just an odd trend to just have it flatline versus everything else while China continues to grow. And I think that backs up a lot of the sort of notions out there that say, hey, the Chinese are going to have a stranglehold on the Chinese market. And, if you are a competing electric vehicle player, you better be careful because they're coming after you. So curious, it's very, very curious graph here from an auto perspective. I don't know if anybody has any thoughts on that, but I just found that this just stuck out to me, this flatness here for everybody else as a percentage of total market share.
That's the BEV share, right?
Yes, sir.
Right. Okay. Well, I mean, to be fair, Martin Vieca in the past has said nothing matters other than total market share. So, I guess this is cool to see, but total market share is really what matters.
Just sliding through the rest of the deck, we got Gigafactory Texas South Expansion Data Center, beautiful glass building. Corpus Christi Lithium Refinery, looks like they're progressing on that. That's supposed to make 1 million batteries equivalent per year. I think it was the number that was given back when it was announced. You got the Cybertruck coding shop. So it looks like that's ramping. Model Y and Quicksilver with 1.9% available interest rate. So a little bit of marketing there. Now available for Model S and X. Lunar Silver, new color. Powers 1 GWh Sierra Estrella site. This is for Megapack and Tesla Energy. Optimus autonomously handling battery cells. So this was sort of the demo that they were giving of the bot doing some basic movements and moving batteries from production line to a container. Some of the key metrics here outlining operating cash flow and free cash flow with the vehicle deliveries and the net income. Again, the net income number and the adjusted EBITDA number is for this quarter is heavily influenced by the jump in vehicle credits and the growth in energy. And then I got to sit down and do some math on the spreadsheet at some point. So Hans, I'll probably have you take over a little bit after we go through the deck here, if you don't mind. And then some of the metrics around operating cash flow and free cash flow. You can see the operating cash flow has is on a downward trend with a little bit of stabilization here in the last 2 quarters. But over here, you can also see adjusted EBITDA net income coming down from the peak of the second quarter of 2023. This is trailing 12 months. Vehicle deliveries, you can also see a flattening, slight downward trend for the trailing 12 months for deliveries. A lot of the things that people focus on for the short term and medium trend for Tesla. And then, some financial statements, balance sheet information, so on and so forth. So I'm going to sit down and do a little bit of number punching here. Hans, do you have some bandwidth to take over a little bit and drive the convo? Yep.
Wait, did you just say number punching though? You're going to punch
number
some
punching.
Okay.
I'm going to punch some numbers in the face.
Mm-hmm. Well, so let's open it up here and just ask, are there any other, maybe Matt, this would be a good time to go to you on energy. Like, what is your reaction to what we're seeing now in the bottom line and the gross profits, and then gross margins on the energy side of things?
Yeah, so energy is one where it was actually very close to what I was expecting. So I put out a post this morning. I forget exactly what it was, but I think I was estimating something like 87% increase in revenue on the back of 136% increase in deliveries. The actuals came in at around 84%. I was expecting a modest increase in gross margin up to 27%. They instead stayed flat at 25%. So the actual kind of numbers are almost exactly as I was expecting. Slightly worse, I guess you could probably say, but really about as I was expecting. And I think there's really not a whole lot of a story there. It's just the kind of revenue recognition, the deferred revenue rules is why we're kind of seeing that decrease. So, or not that decrease, but the revenue not ramping as fast as deployments. That's a kind of temporary item. The other thing that I was looking at a couple things while Farzad was speaking, so maybe I missed this, but there was on the income statement. Let me scroll down to where it was. There's this.
And maybe share your screen if you can as well, so we can see what you're looking at.
Oh, let me see if I can share screen. All right. So there's this restructuring another charge of $622 million. This is related to all the workforce reduction stuff they did and some of the other just costs associated with those headcount reductions that they were doing. So this is a pretty big hit as well. I wasn't forecasting quite this high of a hit, but when you kind of net out the this being a one-time item with the fact that you also had like a very significant one-time increase in the credit revenue, it's around $400 to $500 million higher than it normally is. So net, it's like a $100 million or so like hit to the company. So that kind of makes sense why you have the earnings per share being so much lower. But still, I think it's generally hard to kind of construe it as anything other than like a modestly weak quarter. But that said, not really a whole lot off from what I was expecting. So my adjusted earnings per share forecast was 59 cents, but I think they came in at like 52. So pretty close. Like I don't think there's anything catastrophic here, but it's certainly not the like very strong. Whoops, I almost left the studio instead of stopping to share my screen. There's probably more negatives in here than positives, but I don't think it really changes the story of like what's going to drive results from here. Like we were saying, it's not the numbers that are going to be in the deck today. It's the progress they're making on FSD. It's the new GPUs that they're installing in Giga Texas. So it's mildly disappointing, I guess I would categorize it as.
And then Emma, did you want to jump in here with any thoughts on either what you're seeing in the report or the market reaction?
Yeah, I mean, the market reaction is not as bad as I thought it could be from kind of what I would say is like sort of disappointing Tesla legacy business almost results in terms of EV manufacturing, gross margins, demand seems kind of weak. They have to keep lowering prices or offer zero interest rates to get, and so it's just a matter of time for the investment narrative to kind of shift to the future business of Tesla, which, it will bring up the manufacturing business along with it when the AI and the software gets better and the FSD take rates get better. But it seems like they would have put something in about the FSD take rates if it was exceptionally good, as some others have speculated already. So, yeah, I mean, I'm curious. I think there's some points of friction. Like, I think my mom just got a new Model 3 Highland. She traded in her old Model 3 for a new one. She's in Long Island, and she called me out of the blue, and I was like, "Oh, did you happen to do a test drive with you on the full self-driving?" Because she's like, "Oh," she said, "Oh, they said after I drive for a few hours or a few hundred miles, I should come back and they'll do it." And she's not going to do that, but that's just like a point of friction. Remember, there was that promise to like give everyone a demo of full self-driving when they have to buy the car, and now there's like a point of friction, like, oh no, you got to drive at 100 or a couple hundred miles first, then you come back. That's just, if you could just avoid these points of friction of getting like new people that aren't tech enthusiasts like us to try the full self-driving and get them to use the free subscription, I think that would be a big help. So I don't know how Elon's going to address that. That's my concern. And, just like advertising was, and I see on the 8th question down on say.com, it looks like Kurt C asked a good question. Do you feel you're cheating people out of the joys of owning a Tesla by not advertising? So I hope they get to the 8th question down, because I feel like that's 2 years too late. And so I hope it's not 2 years too late from now when we're saying, why can't they get more people to try out the full self-driving? I hope they think of something. And so that's my concern, is Elon, he's the ultimate decision maker. And I don't know if he relates to the common person that's not a tech enthusiast well enough.
One thing, so if I plug in the energy numbers and I'm looking at gross margins, so the gross margin for energy is 24.6%, which is the same as it was in the first quarter of 2024. So they were able to double revenues, yet keep the same margin, which is, I think, something that people are going to be happy about. Auto gross margin, excluding ZEV credits and lease, is 13.9%, which is going to be impacted by a lot of the manufacturing of those cars that was done in Q1 with a lower production rate. So you're going to get that impact. Also, you're not really seeing a boost from Cybertruck yet. It's probably still weighing down those numbers. I would have expected that to maybe flip this quarter, but perhaps not. So we're still waiting for that to come through. Average selling prices for vehicles, excluding ZEV credits and lease, they're down 2.7%, while COGS are down only 0.24%. Now, again, those COGS are down on a previous quarter, Q1, which is going to be a lot of the cars that would have sold through in Q2 that were at a lower production rate than what would be in the second quarter. So they were still able to lower COGS sequentially, but not as much, not enough to offset the 2.7% reduction in prices from a ASP perspective. Just to throw out some numbers there.
Just to jump in here, Hans, can you box us all, like, so we're all together? There we go. That's the view I like. Just so I can see everybody's face when I say something stupid. Get quick signal.
Hey, Nico. I like the Brady.
Hey, Nico. Right there.
Hey, Matt.
Nice.
Like Hollywood Squares.
Yeah, it's my favorite. Because then I can see everyone equally. Anyways, so first of all, let me.
Sorry, can I cut you off for a second?
Oh,
I'm so sorry. After hours is back to only being down.
That's what
1.
I was gonna
4.
say.
Oh, sorry, I ruined you.
Jeez.
Right.
Wow.
Go for it.
I was gonna say we're only down 1%, and I was gonna make a joke about percentage. Anyways, the mezcal is very dangerous. I took the first sip, and it is strong. It's delicious. It's full body. I'm not a big connoisseur of mezcal. I don't know much about it, but this will be interesting by the end of this whole stream. That's for sure. And I've had one sip.
Do you have like something to plug or something?
No, it's just a Tesla mezcal.
I like when Tesla earnings disappoints, we're gonna just switch to reviewing Tesla liquor.
Yeah. No. Okay. So, all right. So can I offer I don't know, maybe a person who's too bullish on Tesla, a different type of perspective on all this? Because like I get what you're saying, Emmett, as far as FSD take rate, and I get some of the comments about advertising everybody makes, but if I'm putting myself in Elon's seat, I don't give. Oh, I don't want to cuss on here. I don't care about FSD take rate. It's honestly not what I care. It's a means to an end. The whole point of FSD is to get to Robotaxi, right? That's what I care about, is how fast can I get to Robotaxi, because that's where we're really going to print money. And that is going to be the ultimate advertisement, is Robotaxis out there, not actually going out trying to educate. And who cares about educating people at that point? Because if we can really make Robotaxi a real thing, the way we talk about, the way Archivest talks about disrupting cities, getting to a point where it's kind of silly to own a car, it kind of just all answers or solves the problem that we're all talking about for advertising or take rate, or how do we get more people to adopt there? How do we get them to know about the technology? Like, it just seems like solving Robotaxi, it's a domino. It's one answer that solves all the problems. And I think, especially, and as far as like you said earlier, yeah, every time Omar says this version is great and all these things, and to be fair, yes, he does, but at the same time, he has been right. Like every time, like it is like it's the best thing that we've experienced to that point. So I think these are real comments. But 12.5 sounds yet another kind of next level, and I think they just see it trending so clearly towards that I think that's why they decide to, like, okay, why are we going to build new lines for this next gen vehicle that we're going to sell to people when it's just so clear Robotaxi is what's going to happen next. I just think that they're so focused on this that they see it so clearly that it just solves everything. And I get that sounds like I'm just literally drinking his Kool-Aid, but I don't know, that it just seems to me like that's what he's thinking about.
Yeah, I think it backs it up. If I pull this up real quick, this is from Alex at AJ Tourville on X. This is from the earnings report we just went through. The Tesla AI training capacity ramp through the end of year, H100 equivalent GPUs, sort of showing a graph of how Tesla has increased the ramp of their capacity, which is what drives their AI prowess, is this training compute that they're starting to ramp. Between March and June, we've seen sort of them being at about, call it 37,000 to 40,000 equivalent H100 GPUs being used in training. And there's going to be two jumps between now and then that will get them to about 90,000 H100 equivalent GPUs, which is roughly, definitely at least a double, the 2.5 times. And then Elon actually replied to this, and he said, important to note that we also use the Tesla Hardware 4 AI computer in the training loop with NVIDIA GPUs, currently at roughly a 1-to-2 ratio. Also, we're changing the name from Hardware 4 to Artificial Intelligence 4. That means 90,000 H100 plus 40,000 AI 4 computers. So what's interesting here is perhaps this number here doesn't include that AI 4 that he's talking about, where they're going to start leveraging Hardware 4 for training, is what I'm reading here. Hans, maybe help us understand this better.
Yeah, no, it definitely doesn't. And it's interesting that they are now, we had heard that they were going to call Hardware 5 AI 5. And so now for them to actually pull that in and say, we're going to do the same for Hardware 4, the reason, and Nick can also, elaborate on this a little bit more, but the reason that they are adding these Hardware 4 computers, which are going to be set up in a cluster just like you would do these GPUs, which, these are chips that are not originally probably designed to be racked and to be set up, inside some nice, cool warehouse somewhere in rows and rows and rows upon rows of computers, is because they after they solved their compute bottleneck of, okay, now we've got enough H100s or H100 equivalents to train the great new model, whether that's 12.0 or the 12.4 model or the 12.5 model or the impending 12.6 model. Now that we can do that, we've got to figure out, okay, how do we discover every little place that we need to make a patch or a fix to this brand new model? Because, the 12.5 base model is a whole different model than the 12.4 base model. And that's what they're doing with it, what looks to be this, they have a large installation of hardware 3 and probably hardware 4 computers now that's also going to be growing. But they're doing that. They're running simulation basically of driving scenarios that they have encountered in the real world. And so where instead of saying, hey, let's just take the base model and we'll put it out to the fleet, and then we'll let the fleet find all of the places where the model's going to struggle, we're actually going to do an intermediate step where we try to drive, and they can, probably accelerate time in this AI4 cluster to where for every second worth of driving that a hardware, Nico, do you think that that's true? Can they accelerate time or not? Do they have to run them at essentially 1-to-1 clock speed?
You're going to be limited by your bus speed no matter what.
And then if you all do me a favor, just make sure it's sort of translated so that our audience can understand some of the technical details.
So I'm trying to understand what Elon just wrote here, because I feel like he's conflating terms, but I'm not sure, because hardware 4, my vehicle has hardware 4, right? But I feel like he's talking about something else when he says hardware 4 here.
I don't think that's true. I think it is hardware 4. So this is where what I'm relatively confident is that they're taking the hardware 4 computers that would normally go in a car, and they're making a cluster of these. So they're putting a whole bunch of these side by side and rows, up and down, to simulate driving billions of miles through, not just like, these are not simulated miles necessarily of pretend data. This is all of the cases where they have collected from the real world area, like intersections that were challenging, or pedestrian behavior that they've seen that was problematic, and they've saved all of that over time. And now they want to run, this is basically unit testing for the FSD software. And so after it gets trained out of the H100 cluster, then it goes into, and it gets fed into this hardware 4 or AI 4 group of computers, and they try and do all of the validation testing there that they can before they start rolling it out to anyone's actual physical vehicles.
So just to make sure I understand, so it's basically another step in the process. So it's a way for them to test what the training. So by December of 2024, when they have the 90,000 H100 equivalent GPUs that generate some form of driving outcome, then they feed it to 40,000 AI4 computers by then, before they release it to the cars, and gather a lot of the data that those computers are generating, saying, hey, these are the outcomes we're creating based on the training data. And then they can use that to sort of make the
and then
training better and better.
Taking that and feeding it back through another fine-tuning training run to make some quality improvement adjustments to the model. So that's where you're going to get your, 12.5.2 is going to be one where they did some retraining on some areas that needed quality improvements. And then 0.3 is going to be an additional set of retraining on top of that, and, on and on.
Makes sense. Got it. Questions there, Nico, based on what Hans just
No,
said?
I'm just trying to understand what this means. Like, is this their actually how they're trying to, shift left on getting feedback? Is this how they QA? Is this what they're using with simulation to, when he says it's taking, it's thousands of miles between interventions? Is it because this is what they're using? Is it because that's what they're seeing in the fleet? Are we rendered useless at this point, other than for feed and scale input and intervention? I don't know. It opens up so many more questions, and then yeah, I mean it. I don't know. It's so many questions. Like he's that's what Elon does. He says like these 3 or 4 lines, and you're like, what exactly are you saying by this? And then it's like this game of, what do you think he means?
Yeah, I would say that I think the comments that he's made recently about how hard it is to find the interventions, I think this is probably the answer or it's the first way that they're trying to solve that problem. Is now that we
Yeah.
have so many miles that we need to go before we find an intervention, we need to have a new tool in the toolbox in order to help speed up that problem. This became the bottleneck, and I think this massive installation of these rack mounted hardware for computers is the first thing that they're going to use to try and solve that problem. If it doesn't, they'll find a new way to try and solve it. But I think this is the primary and hopefully sufficient means of doing that.
Yeah, assuming we're reading that correctly, which I imagine we are. I think you're spot on, because when Elon first said that comment about thousands of miles, whatever, between, it's hard to tell which model is what. My first thought was like, I don't know, man. Like, every time I pull into a parking lot, like, you're gonna see an intervention there, and sometimes I just want to turn around because there's a building being built and I want to see the progress. You see an intervention there, like, it's not like you don't see them. So like, where's this? And then I thought, okay, maybe it's all these drivers they've hired. I'm like, okay, well, man, okay, maybe, but that's such a small sample size. And so this would actually answer a lot.
Real quick, Tesla stock is down about 3% after hours, 3.5% now. It was down about 5.2% after going up, being down 1.8%, and now it's down 3.5%. So within the scope of movements, especially given, let's say, that the low quality of earnings with the really high rec credits of 890 million, which was over half of the net income that Tesla printed, stock is down 3.5%. So we've seen much larger moves on earnings reports that,
Yeah.
So
as far
any
as
thoughts there?
that, I'm personally happy with the reaction to the stock, given the kind of disappointing earning result. In the past, after a nice run up in the month leading up to earnings, when you have kind of a disappointing earnings report, the stock would easily be down 10 or 20%, but we're down less than 5%. That's, to me, that's a good sign, at least. I think, it seems like we've hit a floor, maybe, or we're close to the floor of Tesla, and hopefully things just get better from here in terms of earnings reports, earnings quality, profitability, demand showing up again in the earnings reports. So I think I'm trying to stay optimistic in what to me seems like a disappointing earnings report, I guess is what I'm saying.
Yeah, I think their ability to also add cash to the balance sheet this quarter is something that I don't think that's going to impact stock price at all. But I think, from my standpoint, it speaks to how it's a financially strong business. Even if we're going to have, disappointing quarters from an earnings perspective, they were still able to add $3 billion to the balance sheet. They were able to bring down inventory by about $2 billion by sort of, let's say, matching production to deliveries. But I mean, these are, if I'm thinking about it, these are inconsequential within the context of artificial intelligence, FSD, and so on and so forth. I think it's a waiting game, such a waiting game with the story right now. I think in the past, this story has had this sort of, I don't know if you guys agree with this, but it's with the deliveries and the ramp of the Model 3 and the ramp of the Model Y and so on and so forth. If you're looking at the auto story, it was a little bit more clearer to see where this was going, because there was actual data out there that you could touch and feel. Whereas this one, because they're trying to solve something so novel with full self-driving and the approach they're taking, it's much more of a black box. It feels like a lot more of a black box. So even in this situation where, let's say, Tesla investors like ourselves are confident that Elon and team and everybody at Tesla will get this done because we're actually feeling it in the cars themselves, it's still a black box because it's a software thing instead of a hardware thing. And we can't actually like go to factories and look at how many cars they're producing. We can't really, the only thing we can look at is like how many H100s they're buying. That's the only thing that's trackable, right? So I think that's what's interesting about the story now. That's the kind of feeling I get. I don't know if you all agree with this or not, but.
I agree.
Yeah, I agree. But also, you got to keep in mind, I mean, I know Tesla stocks, been up like crazy in the last month, 2 months, but it's still, I mean, we're in a slowing economy. Rates are still crazy high. Like it's not like things are just rosy out there either. So not trying to make excuses for a quote unquote bad report, but they've got 18 days worth of inventory, which is essentially zero, right? If you think about having to ship vehicles around, and presumably the Fed's going to start cutting in September. I mean, I think, to your point, Emmett, like the upside, it hasn't even really started to play out yet, right? Once the Fed starts cutting, interest sensitive stocks should start to, seize benefit from that point of view. So I think it's still really early in everything, and we also might be going to a recession, next year. Like you never know. So, just
what do you guys want to do on the earnings call? What's going to turn the perception around a little bit? Because we've had some of these before, where like the report is a little bit, but then Elon kind of goes into salesman mode, and the stock will actually go back to the black. What do you guys think would take, or is it possible to turn it around based on stuff in the earnings call?
I think if he leaks some details about the upcoming vehicles, and gives like a definitive timeline of the Robotaxi unveiling, because as of now, it's still kind of up in the air. I mean, we all assume it's going to be October, but you don't really know until you have a date, right? So if he puts a date down, and then if he also, I think, discloses some stats or metrics on full self-driving subscriptions of the people who tried it for more than X amount of miles, the take rate was this high or something like that, I think that would be positive. I'm not sure they'll disclose that data. I hope that type of question is asked, but it would be interesting just to see what kind of data he would show for that or explain.
Let's start polling some questions from the crowd. And then in about 45 minutes, the Tesla call will go live, and we'll do some live notes on this channel as well. And then before that, we're going to have our Elon doppelganger give us some answers from the Say questions. It's a tradition now, Matt. I hope it is a tradition, because this happens really literally every time. Yeah.
I just want Kirkhorn back. I prefer the Kirkhorn voice.
You can always bring him back for the sake of bringing him back.
One thing I just want to say real quick, I see it mentioned in some of the comments about the Trump and stuff. And I personally think that it's important for Trump to win, for Tesla to succeed, getting past regulatory obstacles and burdens to kind of release the self-driving. I feel like the Harris administration is going to be just as unfriendly to Tesla and Elon as the Biden administration was. And so I just feel like there's a lot of risk in being able to roll out self-driving capabilities if Tesla's the only one that has that capability, with regulators that are tied to the administration, if it's not Trump. So I do feel, I'm not sure the market realizes any of that, or investors are really thinking about that, but I personally think it's important for Tesla's near-term future.
How do you view the rebuttal to that say Trump will be a huge risk to the regulatory credits, which will damage Tesla's ability to post the ZEV credits to the P&L, which is going to hurt margins tremendously? How do you think about that?
I think it hurts their competitors the most, because I think by the time that actually goes into effect, I think the self-driving technology will be so good that it'll be in pilot cities by then, and the regulations being rolled back by the Trump administration is going to more than offset any negative potential from the price increases. I think the price increases will just, it won't matter given the really high demand of using self-driving robotaxis and cars. You know, I just think that's just a huge change in the value of the asset of owning a Tesla once that technology is turned on.
Okay.
Matt,
Nico?
I just want to answer Matt's question. To me, I think things that change kind of the sentiment would be, one, actually telling us when the Robotaxi date will be, what they'll cover, or maybe like just some color around like why it was delayed, like what happened, like, you know, maybe there's something really good there that's going to get us excited. And then also in the deck, they talked about the next gen vehicles, the various ones for first half of 2025. Maybe any kind of color, like first quarter 2025. When can we get a preview of them? When can we see them? Anything around that, because that, you know, increases TAM potentially, and you know, it's exciting, right? New things like that are exciting. But I think that's what people want to hear. And then I guess cause for concern, maybe, that from my point of view, you know, last quarter when we sat here doing this, they had screenshots and pictures of the app. There's nothing in here this time of the app, of Robotaxi, no teaser, nothing. I found that interesting.
Yeah, that's a really good point. I think it'd be pretty bullish if they had Jordan Peterson on the call and he could just say, well, the earnings it's all just a construct. It's the sublimation of
axiomatic
of the earnings profile.
He'll somehow tie it to religion. He'll just figure out how to make it about Adam and Eve, you know? It'd be
just
amazing.
Make your bed, damn it.
Real quick, Emmett, you brought up Trump, so thank you for doing that, because now the comments are a disaster. But I do want to highlight a couple of them, because I do think it's sort of like, you know, I know people get really uncomfortable talking about politics from time to time, and don't worry, we won't spend more than a couple minutes talking about it. But I think it's important that when the CEO of the company has and publicly endorsed one of the candidates, and there's been so much noise around it, there goes Matt. It's important to talk about it, just to have an educated discussion. I know Hans and I on our podcast don't shy away from it, probably to our detriment, but who cares? Just a couple of viewpoints. Mimi, shout out Mimi, one of our mods. Love her to death. She's been with us for a long time. Oh no, please no political propaganda, which I don't agree with at all. This administration had done nothing to hurt Tesla, only mistreat Elon. So in response to Trump being better for Tesla than Harris, Trump is just trying to modify the anti-EV knuckle draggers, but he's not anti-EV, and he loves Elon. And I've seen multiple comments like that as well. And then here was a thought process about the $7,500 credit. That is absurd. Trump will cut the $7,500 credit on day one, which was something that was brought up a couple times as well on the thing. So, Emmett, did you want to sort of add any more color to what you said, or do you want to leave it be where it's at?
We'll just leave it. I think you can't change people's mind. Half the commenters think Trump's good for Elon and Tesla, and half of them think that, you know, Trump is bad for Tesla. You know, I think that the Trump administration would be very good for not only our economy, but especially Tesla. So,
okay.
I'll just jump into this, even though I was trying to slink away earlier. Rohan did quote tweet, quote post, I guess, one of my comments about the reg credits being so high this quarter. And he's got a fair point, basically just saying, you know, one of the major drivers of this quarterly revenue was mentioned twice as a target for elimination by Trump in his convention speech. From 2017 to 21, Trump and his EPA leadership did everything they could to dismantle those pollution regulations and take away the ability of California to set its own pollution standards. So just Rohan's very clearly like an active Democrat. So like it shouldn't be so surprised by this point of view, but it's not without merit too, that like, I think no matter who gets in, if it's Harris or if it's Trump, like I think there's probably going to be, you know, gives and takes either side here. But this, the right credits is I think a very real one that would probably be at least I would imagine they try to do something to push those out.
And just a reminder, Rohan was the previous business development head of Tesla before he departed earlier this year, just to give a little bit of context. I want to bring up some questions from the crowd, but curious to see if there's any other comments from the panel before we do that. Drop your questions in the comment section below.
Less credits, less handouts, the better.
Okay.
Survive on your own merits.
Matt?
Yeah, I mean, like, nobody's investing in Tesla for the credits. So, like, would it be good for Tesla to keep those? Yes. Would it be good to keep the $7,500 tax credit? Yes. But, like, the real story why I think we're all invested is FSD and autonomy and probably EVs just more generally winning on their own merit. So, like, I think these are all kind of ancillary issues that are probably more cause for, like, noise than actual signal. But it doesn't mean that they're not worth keeping an eye on.
Well said.
Okay.
If you disagree with me, you're Hitler.
Well said.
Yes. Keep the rhetoric alive from the last 8 years. Great. We need more of that. Thank you. Okay. Let's bring up this question. Why don't you take account of restructuring and other charges of $0.6 billion? So in our discussion, I think mainly because these are one time. These are not going to be recurring. It's just a one-time expense that just hit the bottom line. But did you guys want to give any additional context to that?
We did talk about that already. So,
okay, there you go. Thank you for your question. FSD subscription was cut from 200 to 100. Did the take rate go up? How much? This is like one of the key things we discussed earlier. It's hard to tell. Tesla didn't show it. They kind of shied away from the Robotaxi stuff. They haven't showed the Robotaxi things. They said they had some commentary around, once more people realize how good it is, they'll take it up. But the fact that they omitted it from the earnings report probably points to the fact that it's not an impressive enough number to show. And one of the things that I've learned, having worked at different businesses in positions where I was very close to the leadership, you rarely want to show a number that you don't want to show, right? You only want to show numbers you want to show. Like, you only want to show good numbers. So the fact that this is not in there after making that change is probably, maybe it's not that big.
I got a little different take on that. One, take rate did go up. We just don't know how much. I know for a fact it went up because I know at least one person or two people who signed up just because it dropped to 100. So we do know it went up, but we don't know how much. I don't necessarily agree with the whole premise that if it was good numbers, they would show it, because I think Tesla in general tries to not show a lot of stuff. I think they kind of subscribe to, I don't know, kind of like the Warren Buffett, like, I don't want to show you everything, so you scrutinize every little thing, like it's just noise. They will show where they're spending their money, hence the H100s and all that. They'll show the miles. They'll show the more interesting things. They don't really flaunt necessarily, like, look at how many Cybertrucks we deliver. Look how many Model Ys we deliver. And we know they've delivered a lot of Cybertrucks. They don't necessarily, they'll flaunt production and milestones, but they don't flaunt a lot of that stuff. It just feels like it's not part of their culture.
Yeah, I just piggyback onto that, actually. Like, I've been wanting for years them to disclose more information around FSD take rates in general and how much is recognizable. We did get a nugget back in, I think it was like 2020, that their take rate at that time for FSD was like 27%. And my expectation was that take rate was going to increase from that level, which it very clearly didn't. It went the other way. So Tesla's like reluctance to disclose that was, I think, a good thing in retrospect. And at some point, there'll be some kind of pivot point where, like, the FSD free trial has kind of gone wide enough, and they've got some stability in some kind of expectation that the take rates have stabilized a bit, and you have like a little bit more of a long history on like what's the cancellation rate, because maybe you've got some amount of subscriptions right now, but the average length of your subscribers probably only like a month and a half or something like that at this point, given how recently the free trials went out. So maybe you give it 6 months or a year to kind of let those rates stabilize, and after you have some like reliable patterns, then maybe Tesla will start disclosing that. So I think they will, but I agree with Nico's point that you want to like wait until you actually have a good story to tell before you start disclosing those numbers.
Well, and I think it is somewhat contrary to, Elon seems very much focused on the Robotaxi future. And so it's kind of like one of those pieces of data that, while we are very interested in it, and I think a lot of investors would be very interested in it, something that Elon might view as a distraction rather than something that is pointing our attention at the thing that he cares about. Oh, and cool. Yeah, I'm glad you actually brought this screenshot up too, Farzad. So, hard right, Dojo 1 will have roughly 8,000 H100 equivalents of training online by the end of the year. Not massive, but not trivial either. So this is final. Like, we have absolute confirmation on what the rough size of the Dojo installation is, and it's not very large. And he says Dojo 1. He doesn't even say Dojo 1.5. So these are, basically the Dojo tiles that have been kind of in prototype and then early stage production for a while now, and they're continuing to add to the size of the cluster, but it is growing much slower than the NVIDIA portion of what they have. And my guess is, I'll stay in speculation land, I'm fairly certain that a large portion of this is going into Buffalo. And so I think that what they're using the Dojo chips for is the auto labeling pipeline to label their training video that then gets fed into the H100 cluster for the the big training runs.
Thank you for that. Let me go ahead and bring up the next question. Here we go. The comment about the tax credit going away. The $7,500 credit was for GM and they failed to produce EVs. That's sort of one of the arguments around how the EV tax credit is actually not really, I mean, obviously Tesla benefits hugely from it, obviously, but they're still profitable without it, even though barely. But all the other automakers are not making any profit. And if that were to go away under a Trump administration, then the other automakers would actually be in a much worse spot than Tesla would be. So apples to apples, it would be net negative, but it will also, it would be definitely a short-term, medium-term hit to Tesla because you are losing now $800 million of rev credit. So real quick,
realistically, if he does on quote unquote day one cancel, that means day one, end of January, he's like announcing he's going to cancel it after this year, after 2025, for example, probably, right? So you'd still have a whole, year and a half from now of that credit working in that case, I would say, that's just my speculation.
I think the complexity with the tax credit is that it's not something that Trump can just wave away. It's law.
You have to have Congress agree to it too.
Congress
right?
has to vote it, right? So he probably needs a majority Republican House and Senate, which is going to be harder to do. So it's kind of like, and then you also have to think about, what are the other portions of the law that are positive for the U.S. I mean, I think the incentivizing of manufacturing onshore, like onshoring manufacturing of next generation batteries. If you have a president that's supposedly pro-business and pro-America, like, why would you want to get rid of that? Like, I understand, getting rid of all subsidies and stuff, but then you have oil and gas one.
I'm sure he'd be consulting with Elon himself directly on like how to structure it the right way, given how it seems like they're getting closer. It seems like Trump has a Elon bat phone and calls him from time to time on stuff. And I'm sure Elon would have a say on how to restructure that type of incentive, to further stimulate battery production in the US, for example.
One would hope. And then on the topic of batteries, I just got this post from Matt, from Jordan, The Limiting Factor. Shout out Jordan. Make sure you go check him out at on X and The Limiting Factor on YouTube. One of the best YouTube channels, period, if you're a nerd about batteries. Hell yes, Jordan says. The reports were true. Tesla appears to have solved the dry cathode. This is a quote from the earnings report. In July, we entered validation of vehicle testing for our first prototype Cybertruck produced with in-house dry cathode 4680 cells, a major cost reduction milestone once ramped. I don't expect the ramp to be cakewalk, but it seems they feel the fundamental technology is in place to ramp the 4680 using a dry process for both electrodes. Beyond that, with the 4680 cells that use the imported wet-coated cathode, they're still ramping hard. In Q2, we produced over 50% more 4680 cells than in Q1 and continue to see cost improvements. Really great news all around. which is, you know, for those that follow the battery story very closely, 4680 ramp has been disappointing, to say the least. And this breakthrough seems to have been recognized by one of the leading battery researchers, I would say, on the internet in Jordan. So this bodes well for both costs and volumes in the long term, if they really do figure this out, if they have figured it out. So thank you for sharing that, Matt. Thank you, Jordan, for, as always, your amazing insights.
Yeah,
go ahead, Matt.
One of the thing I just thought on the back of that, they're trying to add 100 gigawatt hours of 4680 capacity in Giga Nevada, but it doesn't really make sense to try to do that until you solve the dry cathode problem. So to me, this, like, as soon as they solve that and can figure out how to ramp it, then to me that's the green light for really ramping Giga Nevada, which getting an extra 100 gigawatt hours out of that facility would be like phenomenal. So just something to kind of keep in mind of the overall strategy.
Great point. Let's go ahead and bring up another question. What is the quarter-over-quarter spending on new infrastructure, and doesn't that have a big impact on overall margins? It wouldn't have any impact on margin. That would be under capex. So it's more of a, think of it as like a asset hit more than anything. But there is a, I forget what do you remember what the increase was, Matt? Maybe you can get that for us while I go for the next question. Is that okay?
I mean, infrastructure spend is kind of a strange way of putting it, but capex, I presume they mean.
Yeah.
Let me pull that. I think it was actually a decrease if my memory's right, but here we go. Yeah, so they spent $5 billion in capex in Q1. Actually, hang on a second. That's total investing at. They spent $2.7 billion, $2.8 billion on capex in Q1. $2.3 billion in Q2, so a modest decrease, around $500 million decrease.
So they're being very efficient with their deployment. So actually, their infrastructure spend, if we think it's capex by what you mean, Matthew, it went down quarter over quarter. So, but it wouldn't hit margins. It's in a different line. So, I think supervised FSD will remain $100. Full FSD will cost much more because unsupervised cars can drive by themselves without a supervisor on board. This is an excellent point. Something we talked about with car dealership guy on Friday last week, who's a traditional auto dealer veteran. One of the biggest things with unsupervised full self-driving is being able to save time because you don't have to pay attention anymore. But the onus is on Tesla to ensure that they can release that. And I think once they release that, they're going to be able to make some really good things happen, but that's going to take a minute. What's Tesla's total cash on hand? It's about $30 billion. It went up about $3 billion quarter over quarter. And then Ishan, shout out, one of our admins, producer wife, hey, congrats on the little one. Hadn't had a live opportunity yet. Thank you, Ishan. Really appreciate it. Our little one's going to be 8 weeks tomorrow already.
Wow.
It's like, what the hell? Where is time going? How come nobody told me when you're a dad, time doesn't exist anymore? I don't even know how to think about time anymore.
I can
it's just
tell
like,
you need a haircut.
I do desperately. I am a lost cause. Okay. So the call is going to start here in about 25 minutes, 20 minutes. We're going to pull up some Say questions here. Our resident investor relations guru, Emmett, is going to read off some questions for our resident CEO of Tesla, Mr. Matt Smith, a.k.a. Elon Musk, a.k.a. Zach Kirkhorn. And we'll see how closely aligned Matt's answers are going to be to the Say questions. So maybe any last words from the panel about what they expect before we go to our resident Elon Musk.
Can Hans play Saganaki and respond to his annoyance of Elon's answer?
All right, I'll start with the question. Joseph Bell asks, what's the status of the Roadster, Elon?
Hold on, Emmett. One second. Let's make sure we put the questions on the. Are you able to share your screen by any chance?
I don't. I'm looking at another screen actually.
Oh, we don't need the questions. I want to see Matt.
Okay, all right.
Question. I want to look at Matt.
Fair enough. Let me set this up properly. Hang on a second, guys. This is a very high production show.
Not me. Yeah.
Well, I'm working on it. Give me a second. All right. No, Emmett's going to ask the question, and then Matt's going to come in. All right, Emmett.
I literally haven't done
this
last quarter.
It's been a minute.
Okay. I can't believe this got to the top. By the way, this question, but I'm curious about this question, but it's cool that I got to the top. Joseph Bell asks, "What's the status on the Roadster, Elon?"
The thing with the Roadster, it should really be viewed as really more of a Halo product. it's not going to really move the needle in terms of advancing the company's mission. If you look at what we're doing on battery production and especially everything we're doing to advance our AI abilities, this is going to be much more important to the future of Tesla than the 46 than the Roadster. But it is going to be pretty awesome. I can promise you that. We should prioritize these other projects, but for those of you who have been waiting for the Roadster, you will not be disappointed. Mark my word.
With that, Elon, let's go on to Siva Sai K asks, when exactly is the Robotaxi event if it's not on August 8th?
It's on October something. This is not the right venue to be discussing products and product unveils and future events. So at an appropriate time, we will release some more information. But again, you will not be disappointed.
And related to that, Elon, Scott V asks, when do you expect the first Robotaxi ride?
Yeah, we really we're not going to discuss that at this time.
Okay. Andrew S asks, the Cybertruck is an iconic product that wows everyone who sees it. Do you have plans to expand the cyber vehicle lineup to a cyber SUV or a cyber van?
People said that the Cybertruck was not a real vehicle. When we unveiled it, they said it wouldn't be road legal, that it wouldn't be manufacturable. And then when people actually see it on the road, it freaking blows their mind. I was showing a friend who hadn't been in one yet, and he said, this is the future. This is what the future actually should look like. So this is not going to be a mainstream manufacturing process, but this is not the end of cyber vehicles. I will maybe can say that.
Okay, let's do one
in the future.
Let's do one more from Kurt C. He asks, do you feel you're cheating people out of the joys of owning a Tesla by not advertising?
No, I think Biden is cheating the people out of EVs with his inflation and the higher interest rates that we've had to have under his administration. So really, we'd be selling many more vehicles if Trump were in office. And so we will do everything in our power. This is just me speaking. This is not the Tesla official position. But we'd be selling way more EVs if we were making America great again. So we want to make EVs great again, and so we're gonna rock out all these EVs. So I just went completely off the rails there.
Oh man, never fails. The sigh at the beginning, it's so good. I lost it when you did that. That was amazing.
Well, I imagine him struggling with how to convey, compress his thoughts down to something that can be understood with someone at Tony Saganaki's level of intelligence. I think he's got to always compress down what he's saying so that it can be understandable.
That's amazing.
I can
real
see
quick,
you channeling Elon's persona. Your brain, when you look up, your brain is like imagining I'm Elon. What is he going to say? It's pretty cool.
It's like a constant explosion of ideas. You wouldn't want to be me.
By the way, boiled down AH is 100% correct. Drop your best insults in the comment section and I will bring them up. Don't you worry. Matt is a very good sport and he has the face to be punched. So go ahead and put it in the comment section below and we'll bring him up.
I think I do have the most punchable face on the panel. I'll say that.
I think you do.
Nobody would do that to Hans, because I saw somebody in the comments said Hans has the LeBron beard going on right now. It just makes him look tough.
It's like an Amish beard.
It's like a puffer fish.
Looks like your son just joined you in the NBA, bro. How crazy is that? That's so cool, by the way. Okay, 15 minutes from the earnings call. We'll live stream it here on this channel and every other channel you're watching this on. There are other creators as well that are live streaming Tesla stuff. Bring their stuff up. Just bring them all up at the same time and just let the volume come at you at once, because that's going to be a great way to listen to everything. We'll also do a live note taking of the earnings call as well for those that join us. For those that are early, I left you a cute little note, and I'll go ahead and post this at the top of the comment section in the live chat so that you guys can follow along with us as well. So 15 minutes away from the call. Well, what are you guys? How are you guys feeling? What's the vibe?
I got a question. Were those the actual say questions that were most voted?
I skipped down to the first 3 or 4 were the top 3 or 4, but then I skipped down to the 8th one, the advertising one. It's always my favorite topic, you know.
Okay, got it. Okay, I got confused. I'm like, okay, hold on, this really changed quickly on me.
Well, the first 3 or 4, the top 3 or 4, yeah, that was the first. Those are the top.
Guys, I was gonna say I went to sleep last night. I woke up and now the votes are different. I'm like, what the hell happened?
Yeah, that Roadster one snuck up to the top somehow. I didn't see that there yesterday. Yeah,
Manipulation, man.
I remember on X there was one about a machine. Like, did you guys see that one on X? There was just somebody did something voting about how was machine's mom or something. That's funny.
Yeah,
yeah. So do we get depressed Elon or happy Elon? What are we thinking?
I think we get upbeat Elon. He just said good work by Travis and team responding to Martin Vieca. Seems like he's sort of a positive mood maybe to say something like that.
He's way too active on X right now to not be in a good mood.
Yeah, I would say that too.
Okay, so this is interesting. So Google just announced that they're going to invest another $5 billion into its self-driving car business, Waymo.
Whoa.
$5 billion. Okay. So how many cars is that? Like 10? You know, that's their struggle. I mean, that's Waymo's problem. Is it costs like what, $200,000 for each Waymo, unless they're building new ones.
No, sir, that is not their problem. Their problem is that they don't have a means to collect enough data. That's
yeah,
their
long
problem.
term for sure.
No,
Yeah.
not long term. That's the short term problem.
Yeah,
they need the
that's just the
data to
problem.
do anything. Yeah. That's the first step.
That's fair.
Not even
That's
how
fair,
to do something with the data, just how do I get it?
Okay. Yeah, I think we got to upbeat Elon as well. Go ahead and keep posting your questions and comments in the comment section below from both YouTube and X, from any other platforms you're watching from. The earnings call is going to start here in about 13 minutes. We'll bring that live to you. We're going to have a great time together. Thank you, Mimi. Please hit like. Thanks for your support. Thank you very much. Like and subscribe all the channels you're watching. If you want to support, description below. Go ahead, Nico.
Do we think there's going to be any new revelations, interesting things that are there told to us, leaked, etc. on the call? I would say that 40,000 hardware 4 maybe an indication that Elon's feeling good and just wanting to say things that we haven't known in the past. So you think we'll learn anything new that we don't, or do you think it'll just be status quo? We've heard all the same lines over and over.
I think he's going to hype FSD to no end with 12.5. With 12.5 being out and some of the early reviews, he's going to hype that hardcore. You know what I think? I think he's going to leak the adoption rate on the call.
Oh,
I'll just go out on a limb and say that. I think the number is actually better than we think, and he's going to drop it on the call.
That'd be great.
I'm going to be wrong.
That'd be a total Elon move. And this CFO's like, no, Elon, we talked about this. We're not going to do it.
nah, he wouldn't. That guy, he's still on ice. He's gonna take a couple quarters before he's on Elon's good side again.
Do you guys think any of the analysts like Adam Jonas or something's going to ask them some crazy question about integrating SpaceX and Tesla with like Starlinks and the new model or anything like that?
Oh, of course. That's what Adam Jonas does. I feel like he's always asking what's interesting about Adam Jonas is that he asks far-reaching questions that where the context is like sometimes it's like 30 years down the road. You know what I'm saying? Instead of like maybe 5 years down the road or 10 years down the road. It's almost like he's trying to go way too far. You know, that's the sense I get. I mean, it's good. It's good to like, you know, it helps him sort of drive a vision of like, here are the steps we need to take to get there. But it's like, but then at the same time, he also has a model that says, yeah, this business could be $1 trillion, quadrillion, but the stock price should be 30. So it's like, okay, so like what do you want? You know, like help us understand this better. But maybe that's highlighting the complexity of the business, you know?
I vividly remember him asking that question about integrating Starlink on all Teslas going forward. And it was like kind of a forward-looking, like insightful question. But at the same time, it was also like that doesn't really move the needle if you understand how the FSD computer chip works, like where you don't actually need an internet connection for it. Like that's the whole point of the way. So it was just kind of like funny that like he's asking this apparently insightful question that's not actually that insightful. And then it was like a week later, he came out with his report that was like the range of $10 to $190 or whatever that insane report was, where he basically refused to take a stand. So like he's got these insightful questions, but then he's just so wishy-washy on the valuation. It's, I don't know. But I was going to say on Chuck Cook was recently saying how there's a Starlink Mini on some of the FSD testing cars that are doing his turn. So we could have a Jonas. That'd be a prime Jonas question to ask for sure.
Yeah,
that's a Robotaxi play for sure. I mean, I think if you want to maximize in-car entertainment, you need really good internet, and Starlink Mini on a Robotaxi, it's a no-brainer.
And just the redundancy, because if you need an internet connection, should something happen in ISP, you have that backup.
Some of these comments are great. Trying to find insult Matt. If you insult Matt, I will feature your comment guaranteed. Doesn't even have to be a good insult. If you insult Matt, I'll bring it up.
Oh, now I don't want to insult him.
Don't feel bad for him. He beat me in chess 4 times in a row. I'm very bitter.
Oh, what's your elo?
Dog crap.
Not you. I don't care about yours.
Also dog crap. Like so in 10 minute, I'm like 1,000 elo, but in 3 minute, I'm like, I lost 100 elo points playing 3 minutes. So I took like 2 weeks off and I just went to hell. I'm like 630 now or something, just totally embarrassing. Emmett, what are you?
Is that the chess.com rating number they give you?
Yeah.
I play a lot of like course. I'm not that good at the 10 or 12 minute. I think I'm like 1,000 to 1,200 maybe. But I think I like to play the correspondence chess, which is like I have a whole bunch of games where it's like you have 7 days to make a move. So I have like 10 games going on at once, and each one's like a puzzle I'll like think about over time and be like, okay, I think I'm gonna go there, and I have a better rating on that. It's just more, I don't know, I've just gotten in the habit of doing that. It's not as like, you don't have to be at the thing for 30 minutes straight to play the game, you know, or whatever.
Yeah.
You just kind of pull it up.
I'm the opposite.
Or whatever.
I like 10 minute or less. Like, and yeah, Matt, those blitz games will destroy you. Will destroy your ranking.
It's so bizarre because like I got into this point where like I just like slowly and steadily increased my rating, and then like I just didn't play chess for a couple of weeks because of whatever. Got back and it was just like I didn't remember anything. Apparently, it was like hanging my queen left and right, and just it's like oh.
The worst is when you've worked so hard to get your rank up, and then you lose internet connection, and you're like, "Come on, no, I'm here. I'm here. I'm not resigning. Yeah. I'm here."
That's why you need Starlink.
There we go, full circle.
I think the rating is different when you play like at least on chess.com, if you play like 10 minute or less games, it's a different rating they give you versus 10 minute to 15 or 10 minute to 20 minute games, right? And versus like the correspondence games. So they're all different. They compartmentalize the ratings based on how the different levels, because they're very different they're different games. You play really fast or medium speed or slow.
In my experience, Farzad sucks at all of them, just across the board.
It's like a 40-yard sprint versus a 5K. Like they're not equivalent, you know?
Yeah.
One's quick twitch, quick reactive. Like with the blitz games, you're not you're thinking, but you don't really have a lot of time to think. Which is
I
why
took a
like
big
them.
sidetrack for a while. I got worse because I stopped playing for a long time as my kids got into Pokemon, the trading card game. And so I started playing the Pokemon trading card game a lot with them. And there's like this online app that's like, it filled my my chess time playing this Pokemon trading card game online for several months there. So kind of, if you don't play for a while, you kind of take a few steps back, you know?
Oh, you're pulling that up. Can I ask a selfish question here? Emmett, did you, correct me if I'm wrong, but did you used to work or be part of Thinkorswim?
No, I worked for Interactive Brokers in sales.
Interactive
Thinkorswim was a competitor in terms of, you know, they had a very, they had like a very cult following. And so when Thinkorswim sold themselves to, was it Schwab or Ameritrade or something, then you had a lot of people upset, and some of those people would come over to Interactive Brokers, so I'd hear about it a lot and such. Yeah.
Okay, gotcha. So I was gonna ask, like, and maybe this is personal for all of you. You don't have to answer, but what like brokerage house or what platform do you guys use in general?
E-Trade and Fidelity.
I was gonna say, I sound like I'm fishing for like some information. I'm just curious because like I use Fidelity, and it feels so archaic, and it's like. So I know, it's just curious.
Yeah, I mean, I used to work at Interactive Brokers for many years, and so I use them, and I think in terms of cost effectiveness and safety, they're the best hands down. But in terms of like user experience, they're maybe not the best. So their mobile app's pretty easy to use, but signing up for the account, all that stuff is not always easy compared to Fidelity or Schwab.
Cool. Thanks for the info.
All right. We are roughly 4 minutes away from the earnings call from Tesla. Once we hit 4:30 Central, 5:30 Eastern, I'm going to ask the panel to go on mute and so that I can share my system audio so that I can share the notes at the same time, because I can't share the audio just from the tab and show the notes as well. So just a heads up. Usually they start right on time as of late, which is a good trend for Tesla. Typically they're very late, but as of late they've been starting on time. The events have been starting on time, which is kind of cool to see outside of a handful. If we look at Tesla stock real quick, it's still down about 4% in after hours trading. In the past, the call has created some movement for the stock. It's hit or miss, and it's heavily dependent in those cases in the tone and mood of Elon, at least for the short term. So we'll see what kind of Elon we'll get. We think we're going to get an upbeat, happy Elon instead of a depressed Elon. So we'll see how that goes. Any last thoughts in the last 3 minutes here before we turn it over to the Tesla financial result call?
I would say tomorrow, based on the earnings call today, tomorrow I wouldn't be surprised if we end up the day at 220 or 250. That's kind of my range at this point, my 80% confidence interval, I would say. Tomorrow, end of day.
Yeah, I would just say I'd expect a lot more movement. There's supposed to be, I think the implied movement is 9%. Historically, it's about 8%. So that's interesting. So, yeah, should be interesting to watch that as the conversation happens. But it's also not a lot of volume, but it's still fun.
Hans, you want to share? I see you're preparing to share that picture from Elon just now. You want to pull it up real quick? Yeah.
Is it him in a Speedo? Oh, no.
So, so Dojo pics from Elon. So there's two of them. He just posted this about a couple minutes ago. And then there was a second picture as well. So there it is with some of the wires. So there's some live footage of Dojo stuff straight from Elon Musk 4 minutes before the call. Clearly, he's on his phone, sitting at the round table waiting for the call to start. Shout out Elon Musk. And then there was one other post, Hans, if you don't mind. He just posted it under Sawyer's
Waymo money.
Yeah, post about Waymo. If you go to his profile, you should be able to pull it up under, or maybe Yeah, way
right
more
there.
money right there. And you can do it that way in the replies. There you go. Yeah. So from Sawyer Merritt News, Google says they're investing another $5 billion to Waymo, their self-driving robotaxi unit, and then Elon Musk replies, "Waymo money." Just 10 out of 10 wordplay. Fantastic. You should come out with a
10 out
rap
of
album.
10? That's just dad joke territory.
That's
If
a
I said that, you'd be
3.5.
like 3 out of 10.
3.6. 3.6. 10 out
Let
of
me
10
make
in a
fun of
sarcastic
myself.
manner. Yeah.
I must have read that in my head like 5 times. Like, I don't get it. I feel like there's a joke here. And until you said it out loud, did I not get it?
No.
Like, ah.
Yeah. Okay. It's 4:30. Let's go ahead and go on mute. I'm going to go ahead and share my screen and with the volume. And then we'll take notes together. So everybody go on mute if you don't mind. Here we go.
Bye-bye.
And if you don't mind, give me a thumbs up if you can hear the music. Just a heads up, if you are joining us live, oops. If you are joining us live, boost your audio because Tesla's audio quality is not good. Here we go.
Good afternoon, everyone, and welcome to Tesla's second quarter 2024 Q&A webcast. My name is Travis Axelrod, Head of
Confirm you
Investor
can still hear it in the
Relations,
comments
and
for
I'm
me.
joined today by Elon Musk, Vaibhav Taneja, and a number of other executives. Our Q2 results were announced at about 3 p.m. Central Time in the update deck we published at the same link as this webcast. During this call, we will discuss our business outlook and make forward-looking statements. These comments are based on our predictions and expectations as of today. Actual events or results could differ materially due to a number of risks and uncertainties, including those mentioned in our most recent filings with the SEC. During the question and answer portion of today's call, please limit yourself to one question and one follow-up. Please use the raise hand button to join the question queue. Before we jump into Q&A, Elon has some opening remarks. Elon?
Thank you. So to recap, we saw large adoption acceleration in EVs, and then a bit of a hangover as others struggle to make compelling EVs. So there have been quite a few competing electric vehicles that have entered the market, and mostly they have not done well, but they have discounted their EVs very substantially, which has made it a bit more difficult for Tesla. We don't see this as a long-term issue, but really as fairly short-term. And we still obviously firmly believe that EVs are best for customers and that the world is headed for a fully electrified transport, not just of cars, but also of aircraft and boats. Despite many challenges, the Tesla team did a great job executing, and we did achieve record quarterly revenues. Energy storage deployments reached an all-time high in Q2, leading to record profits for the energy business. And we're investing in many future projects, including AI training and inference, and a great deal of infrastructure to support future products. We won't get too much into the product roadmap here because that is reserved for product announcement events. But we are on track to deliver a more affordable model in the first half of next year. Really, by far, the biggest differentiator for Tesla is autonomy. And in addition to that, we have scale economies, and we're the most efficient electric vehicle producer in the world. So, anyway. While others are pursuing different parts of the AI robotics stack, we are pursuing all of them. This allows for better cost control, more scale, quicker time to market, and a superior product. Applying not just to autonomous vehicles, but to autonomous humanoid robots like Optimus. Regarding full self-driving and Robotaxi, we've made a lot of progress with full self-driving in Q2, and with version 12.5 beginning rollout, we think customers will experience a step change improvement in how well supervised full self-driving works. Version 12.5 has 5 times the parameters of 12.4 and will finally merge the highway and city stacks. So the highway stack is still, at this point, is pretty old. So often the issues people encounter are on the highway, but with 12.5, we're finally merged the two stacks. I still find that most people actually don't know how good the system is. And I would encourage anyone to understand the system better to simply try it out and let the car drive you around. One of the things we're going to be doing just to make sure people actually understand the capabilities of the car is when delivering a new car and when picking up a car for service, to just show people how to use it and just drive them around the block. Once people use it at all, they tend to continue using it. So it's very compelling, and then this, I think, will be a massive demand driver. Even unsupervised full self-driving will be a massive demand driver. And as we increase the miles between intervention, it will transition from supervised full self-driving to unsupervised full self-driving, and we can unlock massive potential in the fleet. We postponed the sort of Robotaxi or the sort of product unveil by a couple months, where it's shifted to 10/10, so the 10th of October. And this is because I wanted to make some important changes that I think would improve the vehicle, the sort of the Robotaxi, the main thing that we're going to show, and we're also going to show off a couple of other things. So moving it back a few months allowed us to improve the Robotaxi, as well as add in a couple other things for the product unveil. We're also nearing completion of the south expansion of Giga Texas, which will house our largest training cluster to date. This will be an incremental 50,000 H100s plus 20,000 of our hardware 4 or AI 5 Tesla AI computer. With Optimus, Optimus is already performing tasks in our factory, and we expect to have Optimus production version 1 in limited production starting early next year. This will be for Tesla consumption. It's just better for us to iron out the issues ourselves. But we expect to have several thousand Optimus robots produced and doing useful things by the end of next year in the Tesla factories. And then in 2026, ramping up production quite a bit. And at that point, we'll be providing Optimus robots to outside customers. That'll be production version 2 of Optimus. For the energy business, this is growing faster than anything else. We are really demand constrained rather than production constrained. So we're ramping up production in our US factory, as well as building the Megapack factory in China that should roughly double our output. Maybe more than double, maybe triple potentially. So in conclusion, we're super excited about the progress across the board. We're changing the energy system, how people move around, how people approach the economy. The undertaking is massive, but I think the future is incredibly bright. I really just can't emphasize just the importance of autonomy for the vehicle side and for Optimus. Although the numbers sound crazy, I think Tesla producing at volume with unsupervised FSD, essentially enabling the fleet to operate like a giant autonomous fleet, and it takes the valuation, I think, to some pretty crazy number. ARK Invest thinks on the order of $5 trillion. I think they're probably not wrong. And long-term Optimus, I think, achieves a valuation several times that number. I want to thank the Tesla team for strong execution and looking forward to exciting years ahead.
Great. Thank you very much, Elon. And Vaibhav has opening remarks as well.
Thanks. As Elon mentioned, the Tesla team rose to the occasion yet again and delivered on all fronts with some notable records. In addition to those records, we saw our automotive deliveries go sequentially. I would like to thank the entire Tesla team for their efforts in delivering a great quarter. On the auto business front, affordability remains a top of mind for customers, and in response, in Q2, we offered attractive financing options to offset sustained high interest rates. These programs had an impact on revenue per unit in the quarter. These impacts will persist into Q3 as we have already launched similar programs. We're now offering extremely competitive financing rates in most parts of the world. This is the best time to buy a Tesla. I mean, if you're waiting on the sidelines, come out and get your car. We had a record quarter on regulatory credits, revenues, and as well. On net, our auto margins remained flat sequentially. It is important to note that the demand for regulatory credits is dependent on other OEMs' plans for the kind of vehicles they're manufacturing and selling, as well as changes in regulations. We pride ourselves to be the company with the most American-made cars and are continuing our journey to further localize our supply chain, not just in the US, but in Europe and China, as well for the respective factories. As always, our focus is on providing the most compelling products at a reasonable price. We have stepped up our efforts to provide more trims that have estimated range of more than 300 miles on a single charge. We believe this, along with the expansion of our supercharging network, is the right strategy to combat range anxiety. Since the revision of FSD pricing in North America, we've seen adoption rates increase meaningfully and expect this to be a driver of vehicle sales as the feature set improves further. Cost per vehicle declined sequentially when we remove the impact of Cybertruck. While we are experiencing material costs trending down, note that there is latency on the cost side, and such reductions would show up in the P&L when the vehicles built with these materials get delivered. Additionally, as we get into the second half of the year, it is important to note that we are still ramping Cybertruck and Model 3 and are also getting impacted by varying amounts of tariffs on both raw materials and finished goods. While our teams are working feverishly to offset these, unfortunately, it may have an impact on the cost in the near term. We previously talked about the potential of the energy business and now feel excited that the foundation that was laid over time is bearing the expected results. Energy storage deployments more than doubled, with contribution not just from Megapack, but also Powerwall, resulting in record revenues and profit for the energy business. Energy storage backlog is strong. As discussed before, deployments will fluctuate from period to period, with some quarters seeing large increases and others seeing a decline. Recognition of storage gigawatt hours is dependent on a variety of factors, including logistics timing, as we send units from a single factory to markets across the world, customer readiness, and in case of EPC projects on construction activities. Moving on to the other parts of the business, service and other gross profits also improved sequentially from the improvement in service utilization and growth in our collision repair business. The impact of our recent reorg is reflected in restructuring and other on the income statement. Just to level set, this was about $622 million of charge, which got recorded in the period. And I want people to remember that we've called it out separately on the financials. Sequentially, our operating expenses, excluding such charges, reduced despite an increase in spend for AI-related activities and higher legal and other costs. On the capex front, while we saw a sequential decline in Q2, we still expect the year to be over $10 billion in capex as we increase our spend to bring a 50K GPU cluster online. This new cluster will immensely increase our capabilities to scale FSD and other AI initiatives. We reverted to positive free cash flow of $1.3 billion in Q2. This was despite restructuring payments being made in the quarter, and we ended the quarter with over $30 billion of cash and investments. Once again, we've begun the journey towards the next phase for the company, with the building blocks being placed. It will take some time, but will be a rewarding experience for everyone involved. Once again, I would like to thank the entire Tesla team for their efforts.
Great. Thank you very much, Vaibhav. Now let's go to investor questions. The first question is, what is the status on the Roadster?
With respect to the Roadster, we've completed most of the engineering, and I think there's still some upgrades we want to make to it, but we expect to be in production with the Roadster next year.
Great.
It'll be something special, like a Hall of Famer, I think.
Fantastic. The next question is about timing of Robotaxi event, which we've already covered. So we'll go to the next question. When do you expect the first Robotaxi ride?
I guess that's really just a question of when do I expect the first, when can we do unsupervised full self-driving? It's difficult, obviously, my predictions on this have been overly optimistic in the past. So, I mean, based on the current trend, it seems as though we should get miles between interventions to be high enough that it should be far enough in excess of humans that you could do unsupervised possibly by the end of this year. I would be shocked if we cannot do it next year. So next year seems highly probable to me based on simply plus the points of the curve of miles between intervention. That trend exceeds humans for sure next year. So, yeah.
Thank you very much. Our third question is, the Cybertruck is an iconic product that wows everyone who sees it. Do you have plans to expand the cyber vehicle lineup to a cyber SUV or cyber van?
I think we want to limit product announcements to when we have a specific product announcement event rather than earnings calls.
Great, thank you. Our next question is, what is the current status of 4680 battery cell production and how is the ramp up progressing?
Yeah. 4680 production ramped strongly in Q2, delivering 51% more cells than Q1, while reducing cogs significantly. We currently produce more than 1,400 Cybertrucks of 4680 cells per week, and we'll continue to ramp output as we drive costs down further towards the cost parity target we set for the end of the year. We've built our first validation Cybertruck with dry cathode process made on our mass production equipment, which is a huge technical milestone, and we're super proud of that. We're on track for production launch with the dry cathode in Q4, and this will enable cell costs to be significantly below available alternatives, which was the original goal of the 4680 program.
Great.
Thank you very much. The next question is, any update on Dojo?
Yeah, so Dojo, I should preface this by saying I'm incredibly impressed by NVIDIA's execution and the capability of their hardware. And what we are seeing is that the demand for NVIDIA hardware is so high that it's often difficult to get the GPUs. There just seems this, I guess I'm quite concerned about actually being able to get state-of-the-art NVIDIA GPUs when we want them. I think this therefore requires that we put a lot more effort on Dojo in order to ensure that we've got the training capability that we need. So we are going to double down on Dojo, and we do see a path to being competitive with NVIDIA with Dojo. And I think we kind of have no choice because the demand for NVIDIA is so high, and it's obviously their obligation essentially to raise the price of GPUs to whatever the market will bear, which is very high. So I think we've really got to make Dojo work, and we will.
Great. The next question is, what type of accessories will be offered with Optimus?
Optimus is intended to be a generalized humanoid robot with a lot of intelligence. So it's like saying, what kind of accessories will be offered with a human? It's just really intended to be able to be backwards compatible with human tasks. So it would, use any accessories that a human would use. Yeah.
Thank you. The next question is, do you feel you're cheating people out of the joys of owning a Tesla by not advertising?
We are doing some advertising. So,
Yeah.
want to say something?
Yeah, I'll say something. Our fundamental belief is that we need to be providing the best products at a reasonable price to the consumers. Just to give you a fact, in US alone in Q2, over 2/3 of our sales deliveries were to people who had never owned a Tesla before, and which is encouraging. We've spent money on advertising and other awareness programs, and we have adjusted our strategy. We're not saying no to advertising, but this is a dynamic play, and we know that we have not exhausted all our options, and therefore plan to keep adjusting in the later half of this year as well.
Great, thank you very much. The next question is on energy growth, which we already covered in opening remarks. So we'll move on to the next one. What is the updated timeline for Giga Mexico, and what will be the primary vehicles produced initially?
Well, we currently oppose on Giga Mexico. I think we need to see just where things stand after the election. Trump has said that he will put heavy tariffs on vehicles produced in Mexico. So it doesn't make sense to invest a lot in Mexico if that is going to be the case. So we kind of need to see where things play out politically. However, we are increasing capacity at our existing factories quite significantly. And I should say that the cyber taxi or Robotaxi will be produced here at our headquarters at Giga, Texas.
All right, thank you.
Sorry, as will Optimus towards the end of next year for Optimus production version 2. The high volume version of Optimus will also be produced here in Texas.
Great, thank you. Just a couple more. Is Tesla still in talks with an OEM to license FSD?
There are a few major OEMs that have expressed interest in licensing Tesla Full Self-Driving, and I suspect there will be more over time, but we can't comment on the details of those discussions.
All right, thank you. And the last one, any updates on investing in xAI and integrating Grok into Tesla software?
I should say that Tesla is learning quite a bit from xAI. It's been actually helpful in advancing Full Self-Driving and in building up the new Tesla data center. Regarding investing in xAI, I think we'd need to have a shareholder approval of any such investment. But I'm certainly supportive of that if shareholders are. But I think we need a vote on that. And I think that there are opportunities to integrate Grok into Tesla software. Yes.
All right, thank you very much. And now we will move on to analyst questions. The first question comes from Will Stein from Truist. Will, please go ahead and unmute yourself.
Great, thanks so much for taking my question. And this relates a little bit to the last one that was asked. Elon, I share your strong enthusiasm about AI, and I recognize Tesla's opportunity to do some great things with the technology, but there are some concerns I have about Tesla's commercialization, and that's what I'd like to ask about. Specifically, there were some news stories through the quarter that indicated that you redirected some AI compute systems that were destined for Tesla instead to xAI, or perhaps it was to X, I'm not sure. And similarly, a few quarters ago, if you recall, I asked about your ability to hire engineers in this area, and you noted that there was a great desire for some of these engineers to work on projects that you were involved with, but some of them weren't at Tesla. They were instead XAI or perhaps even X again. So the question is, when it comes to your capital investments, your AI R&D, your AI engineers, how do you make allocation decisions among these various ventures, and how do you make Tesla owners comfortable that you're doing it in a way that really benefits them? Thank you.
Yeah, I mean, I think you're referring to a very like an old article regarding GPUs. I think that's like six or 7 months old. Tesla simply had no place to turn them on. So it would have been a waste of Tesla capital because we would just have to order H100s and have no place to turn them on. So it was just, this wasn't a, let's pick XAI over Tesla. There was no, the Tesla data centers were full. There was no place to actually put them. We've been working 24/7 to complete the south extension on the Tesla Gigafactory here in Texas. That south extension is what will house the 50,000 H100s, and we're beginning to move the H100 server racks into place there. But we needed that to be complete physically. You can't just order GPUs and turn them on with no. You need a data center. It's not possible. So I want to be clear that was in Tesla's interest, not contrary to Tesla's interest. Does Tesla no good to have GPUs that it can't turn on? The split second that south extension is able to take GPUs, which is really just this week. We are moving GPUs in there and we'll bring them online. With regard to XAI, there are people that only want to work on AGI. So what I was finding was that when trying to recruit people to Tesla, they were only interested in working on AGI, not Tesla specific problems, and they want to do a startup. So it was a case of either they go to a startup or and I'm involved, or they do a startup and I'm not involved. Those are the two choices. This wasn't they would come to Tesla. They were not going to come to Tesla under any circumstances. Yeah.
Yeah, I mean, I would even add that, AI is a broad spectrum, and there are a lot of things which, we are focused on full self-driving as Tesla and also Optimus. But there's the other spectrum of AI which we're not working on, and that's the kind of work which other companies are trying to do, in this case, XAI. So you have to keep that in mind, that it's a broad spectrum. It's not just one specific thing.
Yeah, and once again, I want to just repeat myself here. I tried to recruit them to Tesla, including to say, like, you can work on AGI if you want, and they refused. Only then was XAI created.
I really appreciate that clarification. If I can ask one follow-up, it relates to the new vehicles that you're planning to introduce next year. I understand this is not the venue for product announcements, but when we think about the focus, I've heard on the one hand that the focus is on cost reduction. On the other hand, you also said that the Roadster would come out. Should we expect other, maybe more limited variants, like similar to the cars that you make today, but with some changes or improvements or different, some other variability in the form factors? Should we expect that to be a significant part of the strategy in the next year or two?
I don't want to get into the details of product announcements, and we have to be careful of the Osborne effect here. So, if you start announcing some great thing, it affects our near-term sales. We're going to make great products in the future, just like we have in the past. End of story.
Great. The next question comes from Ben Callow from Baird. Ben, please go ahead and unmute yourself.
Hi, thanks for taking my question. When we think about revenue contribution and with energy growing so quickly and, Optimus on the come, how do we think about, the overall segments longer term? And then do you think that auto revenue will fall below 50% of your overall revenue? And then my follow-up is just on the last call, you talked about distributed compute on your new hardware. Could you just update us and talk a little bit more about that, the timeline for it, and how you would reward customers for letting you use their compute power in their cars? Thanks.
Yeah, I mean, as I've said a few times, I think the long-term value of Optimus will exceed that of everything else at Tesla combined. So it's simply, if you simply consider the usefulness, utility of a humanoid robot that can do pretty much anything you ask of it, I think everyone on Earth is going to want one. There's 8 billion people on Earth, so that's 8 billion right there. Then you've got all of the industrial uses, which is probably at least as much, if not way more. So I suspect that the long-term demand for general-purpose humanoid robots is in excess of 20 billion units. And Tesla has the most advanced humanoid robot in the world, and is also very good at manufacturing, which these other companies are not. And we've got a lot of experience the most experience. We're the world leaders in real-world AI. So we have all of the ingredients. I think we're unique in having all of the ingredients necessary for large-scale, high-utility, generalized humanoid robots. That's why, my rough estimate long-term is in accordance with the ARK Invest analysis of, a market cap of on the order of 5 trillion for, maybe more for autonomous transport. And it's several times that number for general purpose humanoid robots. I mean, at that point, I'm not sure what money even means. But, in the benign AI scenario, we're headed for an age of abundance where there is no shortage of goods and services. Anyone can have pretty much anything they want. It's a very wild future we're headed for.
On the distributed compute?
Yeah, distributed compute. That seems like a pretty obvious thing to do. I think where the distributed compute becomes interesting is with our next generation Tesla AI chip, which is Hardware 5, or what we're calling AI 5, which is from the standpoint of inference capability comparable to a B200, an NVIDIA B200. And we're aiming to have that in production at the end of next year and scale production in 26. So it just seems like even if you've got autonomous vehicles that are operating for 50 or 60 hours a week, there's 168 hours in a week. So you have somewhere above, I think, 100 neural net computing. I think we need a better word than GPU, because GPU means graphics processing unit. So there's 100 hours plus per week of AI inference compute from the fleet, from the vehicles, and probably some percentage from the humanoid robots, that it would make sense to do distributed inference. And if there's a fleet of, at some point, 100 million vehicles with AI 5 and beyond, because you have AI 6 and 7 and whatnot, and there may be billions of humanoid robots, that is just a staggering amount of inference compute that could be used for general purpose computing. It doesn't have to be used for the humanoid robot or for the car. So I think that's a pretty obvious thing to do. say like, well, it's more useful than having to do nothing.
All right, thank you. The next question comes from Alex Potter from Piper. Alex, please go ahead and unmute yourself.
Perfect, thanks. Wanted to ask a question on FSD licensing. You mentioned that in passing previously. Was just wondering if you can elaborate maybe on the mechanics of how that would work. I guess presumably this would not be some sort of simple plug and play proposition. That presumably an OEM would need, I don't know, several years to develop its own vehicle platform that's based on FSD. I imagine they would need to adopt Tesla's electrical architecture, compute, sensor stack. So correct me if I'm sort of misunderstanding this, but if you had a cooperative agreement of some kind with another OEM, then presumably it would take you several years before you'd be able to recognize licensing revenue from that agreement. Is that the right way to think about that?
Yes. The OEMs do not move fast. There's not really a sensor suite. It's just cameras. But they would have to integrate our AI computer and have cameras with a 360-degree view. At least the gateway, like what talks to the internet and communicates with the Tesla system, that you need kind of a gateway computer too. So it's really a gateway computer with the cellular and Wi-Fi connectivity, the Tesla AI computer, and 7 cameras, or enough cameras to get a 360-degree view. But this will, given the speed at which the auto industry moves, it would be several years before you would see this in volume.
Okay, good. That's more or less what I expected. So then the follow-up here is, if you did sign an FSD licensing agreement with another automaker, when do you think you would disclose that? Would you do it right when you sign the agreement, or only after that multiple years has passed and the vehicle is ready to be rolled out?
I think it depends on the OEM. I guess we'd be happy either way.
Yeah, it depends on what kind of arrangement we enter into. A lot of those things we've not ironed those out yet. So we'll make that determination as and when we get to that point.
Right. And the kind of deals that are obviously relevant are only if some OEM is willing to do this in 1 million cars a year or something significant. It's not if it's like 10,000 or 100,000 cars a year. We could just make that ourselves.
All right, thank you. The next question comes from Dan Levi from Barclays. Dan, please go ahead and unmute yourself.
Hi, good evening. Thanks for taking the questions. First, wanted to start with a question on Shanghai. You've leveraged Shanghai as an export center, really due to its low cost, and that makes sense. But maybe you can just give us a sense of how the strategy changes, if at all, given the implementation of tariffs in Europe. Also, to what extent your import of batteries from China into the US, how that might change given the tariffs. Thank you.
Yeah, I think I covered some part of it in my opening remarks, but just to give you a little bit more, just on the tariff side, the European authorities did sample certain other OEMs in the first round to establish the tariffs for cars being imported from China into Europe. While we were not picked up in our individual examination in the first round, they did pick us up in the second round. They visited our factory. We worked with them, provided them all the information. As a result, we are adjusting our import strategy out of China into Europe. One other thing to note is in Q2 itself, we started building right-hand Model Ys out of Berlin, and we also delivered it in UK. And we're adjusting as needed, but we will keep adjusting. We're still importing Model 3s into Europe out of Shanghai. And, we are still evaluating what is the best alternate to manage all this. Just on the examination by the European authorities, like I said, we cooperated with them well. we are confident that we should get a better rate than what they have imposed for now. But this is literally evolving, and we are adjusting as fast as we can with this. It is. I would also add that, because of this, you've seen the impact that Berlin is doing more imports into places like Taiwan, as well as, UK I just mentioned. So it will keep changing, and we will keep adapting as we go about
it. Great, thanks. Yeah, thank you. As a follow-up, I wanted to ask about the Robotaxi strategy, and specifically the shareholder deck here notes that the release is going to be one of the gating factors is regulatory approval. So maybe you could help us understand, which regulations specifically are the ones that we should be looking for. Is it FMVSS that's standard? And then, to what extent does the strategy shift you've done with FSD more of a nationwide, no boundary approach? Is the Robotaxi approach one that's more geofence, so to speak, and is more driven by a state-by-state approach?
I mean, our solution is a generalized solution, unlike what everybody else has. If you see it like Waymo and whatnot, they have a very localized solution that requires high density mapping. It's quite fragile. So, their ability to expand rapidly is limited. Our solution is a general solution that works anywhere. It would even work on a different Earth. So if you rendered a new Earth, it would work on a new Earth. So there's capability. I think in our experience, once we demonstrate that something is safe enough or significantly safer than human, we find that regulators are supportive of deployment of that capability. It's difficult to argue with if you've got a large number of, if you've got billions of miles that show that in the future unsupervised FSD is safer than human. What regulator could really stand in the way of that? They're morally obligated to approve. So I don't think regulatory approval will be a limiting factor. I should also say that the self-driving capabilities that are deployed outside of North America are far behind that in North America. So with version 12.5 and maybe 12.6, but pretty soon we will ask for regulatory approval of the Tesla supervised FSD in Europe, China, and other countries. And I think we're likely to receive that before the end of the year.
Thank you.
Which will be a helpful demand driver in those regions, obviously.
Thank you.
Just to add to that, Travis, in terms of as Elon said, in terms of regulatory approval, the vehicles are governed by FMVSS in the US, which is NHTSA, which is the same across all 50 states. The road rules are the same across all 50 states. So creating a generalized solution gives us the best opportunity to deploy in all 50 states reasonably. Of course, there are state and even local, municipal level regulations that may apply to, being a transportation company or deploying taxis. But, as far as getting the vehicle on the road, that's all federal, and that's very much in line with what, Elon was just suggesting about the data and the vehicle itself.
And to add to the technology point, the end-to-end network basically makes no assumption about the location. You could add data from different countries and it would just perform equally well there. There's almost close to zero US specific code in there. It's all just the data that comes from the US.
Yeah, to that end, Ashok, it's we can go as humans to other countries and drive with some reasonable amount of assessment in those countries. And that's how you design the FSD software.
Yeah, exactly.
Great. Thanks, guys. The next question comes from George from Canaccord. George, please go ahead and unmute yourself.
Hi, everyone. Thank you for taking my questions. Maybe just to expand on the regulatory question for a second, and I could be comparing apples and oranges, but GM canceled their pedalless, wheelless vehicle, and according to the company this morning, their decision was driven by uncertainty about the regulatory environment. And from what we understand, and again, maybe I'm wrong here, but the Robotaxi that has been shown, at least in images of the public, is also pedalless and wheelless. Is there a different regulatory concern just if you deploy a vehicle like that doesn't have pedals or a wheel, and that may be different from just regular FSD on a traditional Tesla vehicle? Thank you.
Well, obviously, the real reason that they canceled it is because GM can't make it work, not because of regulators. They're blaming regulators. That's misleading of them to do so, because Waymo is doing just fine in those markets. So it's just that their technology is not up to par.
Right. And maybe just as a follow-up, I think you mentioned that FSD take rates were up materially after you reduced the price. Is there any way you can help us quantify what that means exactly? Thank you.
Yeah, I mean, we've shared we've seen a meaningful increase. I don't want to get into specific because we started from a low base, but we are seeing encouraging results. And the key thing here is, like Elon said, you need to experience it, because words can't describe it till the time we actually use it. And that's why we are trying to make sure that every time a car is getting delivered, people are being showed how this thing is working, because when you see it working, you realize how great it is. I mean, just to give you one example, so again, there's a biased example, but I have a more than 20-mile commute into the factory almost every day. I have 0 interventions on the latest stack, and the car just literally drives me over. And especially with the latest version, wherein we're also tracking your eye movement, the steering wheel nag is almost not there, as long as you're not wearing sunglasses.
Well, we're fixing the sunglasses thing. It's coming soon. So you will be able to drive. You'll be able to have sunglasses on and have the car drive.
Yeah.
But the sheer number of times I've talked with smart people who like live in New York or maybe downtown Boston and don't ever drive, and then are asking me about FSD, and I'm like, you can just get a car and try it. If you're not doing that, you have no idea what's going on.
Thank you. The next question comes from Pierre from New Street. Pierre, please unmute yourself.
Hey guys, thank you for taking my question. So it's on Robotaxi again, and I completely get it that with a universal solution, we will get like regulatory approval. We get there eventually, clicking up miles and compute, etc. And my question is more how you think about deployments, because I'm thinking once you have a car that can drive everywhere, that can replace me. It can replace a taxi, but then to do the ride-hailing service, you need a certain scale. And that means a lot of cars on the road, and so you need an infrastructure to just maintain the cars, take care of them, etc. And so my question is, are you already working on that? Do you have already an idea of what your plan to deploy looks like? And is that like a Tesla only plan, or are you looking at partners, local partners, global partners to do that? And I'll have a quick follow-up.
Yeah, this would just be the Tesla network. You just literally open the Tesla app and summon a car, and we send a car to pick you up and take you somewhere. We'll have a fleet that's, I don't know, on the order of 7 million that are capable of autonomy soon. In the years to come, it'll be over 10 million, then over 20 million. This is immense scale. the car is able to operate 24/7, unlike the human driver. So the capability to, like, there's this basically instant scale with a software update. And now this is for a customer-owned fleet. So you can think of that as being a bit like Airbnb. Like, you can choose to allow your car to be used by the fleet, or cancel that and bring it back. It can be used by the fleet all the time. It can be used by the fleet some of the time, and then Tesla would share in the revenue with the customer. But you can think of the giant fleet of Tesla vehicles as like a giant sort of Airbnb equivalent fleet, Airbnb on wheels. Then in addition, we would make some number of cars for Tesla that would just be owned by Tesla and be added to the fleet. I guess that would be a bit more like Uber. But this would all be the Tesla network. And there's an important clause we've put in every Tesla purchase, which is that the Tesla vehicles can only be used in the Tesla fleet. They cannot be used by a third party for autonomy.
Okay. And do you think that scales like progressively, so you can start in a city with just a handful of cars and you grow the number of cars over time, or do you think there is like a critical mass you need to get to be able to offer like a service that is of competitive quality compared to what like Uber would be typically delivering already?
I guess maybe I'm not conveying this correctly. The entire Tesla fleet basically becomes active. This is obviously, maybe there's some number of people who don't want their car to earn money, but I think most people will. It's instant scale.
Thank you. Our next question comes from Colin from Oppenheimer. Colin, please unmute yourself.
Sorry about that, guys. I've got two questions around energy storage. With the tight supply and the stationary storage, can you talk about your pricing strategy and how you're thinking about saturation in given geographies, given that some of these larger systems are starting to shift wholesale power markets in a pretty meaningful way quickly?
So we are working with a large set of players in the market, and our pipeline is actually pretty long, and there's actually a long end in terms of where you enter into a contract to where delivery starts happening. And so far we have good pricing leverage, and I'll have Mike chime in on this too.
Yeah, there's a lot of competition from Chinese OEMs, just like there is in the vehicle space. So we're in close contact with our customers and making sure that we're remaining competitive in where they're needing to be competitive to secure contracts to sell power and energy in the markets. We had a really strong contracting quarter and continue to build our backlog for 2025 and 2026. So we feel pretty good about where we are in the market. We realize that competition is strong, but we have a pretty strong value proposition with offering a fully integrated product with our own power electronics and site level controls. So
yeah, and again, the aspect which people do not fully understand is that there's also a whole software stack which comes with our Megapack.
Right.
And that is a unique proposition which we have, which is only available to us, and we're using it with other stuff too. But that gives us a much more of an edge as compared to the competition.
Yeah, we find customers that they can sort of put together a hodgepodge solution, and then sometimes they'll pick that solution, and then that doesn't work, and then they come back to us.
Yeah, and we're not really seeing saturation on a global scale. There's little pockets of saturation in different markets, but we're more seeing that there's markets opening up given demand on the grid just continues to increase more than anyone expects. So that just opens up markets, really across the world in different pockets.
Yeah, just even on the AI compute side, right? These GPUs are really power hungry. And the amount of new pipeline which we're getting for people for data center backup and things like that is increasing at a pretty large scale.
Yeah.
Thanks so much. And then the follow-up here is around the 4680 process technology, and the roll-to-roll process. There's some news around your equipment suppliers. Can you talk about how far along you are in potentially qualifying an incremental supplier around some of those critical process technology steps?
Yeah, I can talk about that. As you're probably referring to the lawsuit that we have with one of our suppliers. Look, I don't think this is going to affect our ability to roll out 4680. We have very strong IP position in the technology, and the majority of the equipment that we use is in-house designed, and some of it's in-house built. And so we can take our IP stack and have someone else build it if we need to. So that's not really a concern right now.
Yeah, I think people don't understand just how much demand there will be for grid storage. They really just, like, the people, I think, are underestimating this demand by probably orders of magnitude. So the actual total energy output of, say, the US grid is, if the power plants can operate at steady state, is at least 2 to 3 times the amount of energy it currently produces. Because there are huge gaps. There's a huge difference in the from peak to trough in terms of energy or power generation. So in order for a grid to not have blackouts, it must be able to support the load at the worst minute of the worst day of the year, the coldest or hottest day, which means that for the rest of the time, the rest of the year, it's got massive excess power generation capability, but it has no way to store that energy. Once you add battery packs, you can now run the power plants at steady state. Steady state means that basically any given grid anywhere in the world can produce, in terms of cumulative energy in the course of a year, at least twice what it is currently producing. In some cases, maybe 3 times.
All right, thank you.
This is a very profound thing.
Thank you, Elon. The next question comes from Colin Langan from Wells Fargo. Colin, please unmute yourself.
Oh, great. Thanks for taking my questions. Do you hear me?
Yeah.
Yeah.
Oh, okay, good. Sorry. I guess I'm going to ask, if Trump wins, there's a higher chance that IRA could get cut. I think, Elon, you had commented online that Tesla doesn't survive on EV subsidies. But wouldn't Tesla lose a lot of support if IRA goes away? I think Model 3 and Y get IRA help for customers, and I think your batteries get production tax credits. So just can you clarify if IRA ends, would it be a negative for your profitability in the near term? Why might it not be a negative? And then, any framing of the current, support you get IRA related.
I guess that there would be like some impact, but I think it would be devastating for our competitors, but and it would hurt Tesla slightly. But long term, probably actually helps Tesla. That would be my guess. But and I've said this before in these calls. The value of Tesla overwhelmingly is autonomy. These other things are in the noise relative to autonomy. So I recommend anyone who doesn't believe that Tesla will solve vehicle autonomy should not hold Tesla stock. They should sell their Tesla stock. If you believe Tesla will solve autonomy, you should buy Tesla stock. And all these other questions are in the noise.
Yeah, I mean, I'll ask this just to clarify a few things, that at the end of the day, when we are looking at our business, we've always been looking at it, whether or not IRA is there. And we want our business to grow healthy without having any, subsidies coming in, whichever way you look at it. And that's the way we have always modeled everything. And that is the way internally also, even when we're looking at battery costs, yes, there are manufacturing credits which we get, but we always drive ourselves to say, okay, what if there is no IRA benefit? And how do we operate in that kind of an environment? And like Elon said, we definitely have a big advantage as compared to our competition on that front. We've delivered it, and you can see it in the numbers over the years. So you cannot ignore the fundamental sides of the business. And then on top of it, once you add autonomy to it, like Elon said, it becomes meaningless to even think about the short term.
Okay. I think that's unfortunately all the time we have for today. We appreciate all of your questions. We look forward to talking to you next quarter. Thank you very much and goodbye.
All right, everybody. Lower your volumes. I don't want to blow your eardrums out. So please lower your volumes. Lower your volumes.
It was actually fine for me, Farzad.
Huh? Well, you just blew somebody's eardrums out.
I didn't have any volume differential. I don't know.
Really? Okay. Did you guys have one or no? Maybe
a little bit
just
on my end, yeah.
Yeah, okay. Maybe not as severe as the other ones. Let me go ahead and bring up my notes real quick, and then let me just go through my notes, and I'm going to share these real quick on X as well so that everybody can read them for themselves. And then we'll go into the panel and see what people think. On the opening remarks, storage at an all-time high was something that they highlighted, kind of talking about some of the notes from the earnings report as well about how, people will buy EVs once they figure out that it's the best technology. So kind of reinforcing that a little bit, highlighting how FSD with 12.5 customers will experience a step change in improvement. Most people still don't know how good the system is. When delivering a new car at a service or location, they want to show people how good FSD is to try and drive adoption of it. Robotaxi unveil is now delayed officially to October 10th. 10/10 is the new date. Wanted to make some important changes to improve Robotaxi. The main thing they're going to show, and some other things as well. Nearing the completion of the south expansion at Giga Texas. Optimus is already performing tasks in factories. And then in 2025, Tesla should produce thousands of units for Tesla consumption to iron out issues themselves. And then ramping up production quite a bit in 2026 and selling to outside customers. This is their V2 robot, which will be produced in Texas, in their Austin, Texas factory. Energy business is growing faster than anything else, and cannot emphasize enough how autonomy for vehicle and Optimus will make a huge deal for Tesla. All the numbers sound crazy. Tesla turning on autonomous fleet will take valuation to $5 trillion, which is the ARC number, and Optimus will achieve a valuation several times that of that. The CFO kind of just gave us a rundown of the financials, so I'm not going to go through that. Let's see what else here. I saw that Cybertruck is now at 1,400 units per week, and that's on 4680 was a number that I saw. So it seems like Cybertruck ramp's going well. They also mentioned Dojo. Tesla requires that. So one of the issues Tesla's having, they're saying, is that NVIDIA demand is so high for their chips. It's hard for them to get the chips when they want it, and they're very expensive. So Tesla's making a commitment to double down on Dojo and see a path to be competitive with NVIDIA. They have no choice. There's too much demand for NVIDIA chips. Let's see. Do you feel you're cheating out the joys of Tesla by not advertising? I know this was a comment that we wanted to hear, and we got a very standard Elon answer. We already do advertising. Fundamental belief is that we need to provide the best product for the best price. 2/3 of sales in Q2 were to people that never owned a Tesla before. Tesla hasn't exhausted all their options and will continue to adjust strategy as needed. Giga Mexico, they're waiting to see what the tariff situation is going to look like with the new president before they invest a lot of time and money in the grow out of that, because there's some uncertainty around that. Trump wants to put heavy tariffs on stuff coming out of Mexico to promote localized manufacturing. And then Robotaxi, reconfirmation that Robotaxi and Optimus will both be produced in Texas. they're in talks with multiple OEMs that have expressed interest in FSD. But one of the questions was, hey, there's going to be a long lead time for this. It's going to take years for somebody to do it. And Tesla could either announce it when they sign the paper or when they are ready to unveil the product. But this could be years away. And then Tesla's learning quite a bit from XAI, which is helping advancing FSD rollout. And if there was a question around potentially Tesla investing in XAI, and Elon's for it, but it would need to be approved by shareholders, so it would need to be up to a vote. Now, around the AI, the analyst questions, I thought some of the analyst questions this time around were a little bit more forward-looking than the other ones, which I thought was actually refreshing. On the AI front, there were some concerns around allocating GPUs, hardware, and talent between XAI and Tesla. That, hey, how are you making sure that Tesla is getting the talent and hardware they need? Elon's answers was basically, hey, if you're talking about that thing from 6-7 months ago, we had nowhere to put the GPUs. We're working around the clock to expand the facility in Texas to be able to put the GPUs in there. And as far as talent goes, the people that were working at XAI were either going to work at XAI or not work anywhere else because they wanted to be a part of startup. So he says that these weren't candidates that Tesla would have gotten in the first place because they're looking for a true startup to work at. And he reiterated, he tried to recruit them to Tesla, even saying that they can work on AGI if they want, but they only wanted to work at XAI because they were part of the startup culture. I'm going to guess it's because they get a lot more stock at XAI than they would at Tesla. Nothing about new details on the new car. Revenue contribution from Energy and Optimus. How should one think about the segments? Is auto going to go under 50%? We got the very usual thing from Elon that Optimus is going to put everything else to shame. It's going to be gigantic. At some point, he thinks that human or robots could be in excess of 20 billion units. If you think about the current amount of humans on Earth, which is 8 billion, plus all the different industries that exist. And they think that Tesla has the most advanced human or robot, and so they're in a very good situation to capitalize on that if they're successful. And then distributed compute was another question that came up, and it seemed like an obvious thing to do, Elon said, is have distributed compute when you have 100 million cars on the road and potentially billions of robots roaming around. That's a lot of compute power that's sitting idle that you could leverage. FSC licensing we talked about. Let me see. And then there was some questions around Shanghai, leveraging it as an export center. Was there a strategy change? Is there going to be a strategy change if the tariffs would change around that region, like with Europe and so on and so forth, because there are some Chinese cars that get shipped to Europe? And then the answer was like, yeah, we're just going to adapt and change to whatever is needed. The Robotaxi strategy, Pierre Ferragu brought up a question, very similar response that we've gotten. It's basically Airbnb on wheels. Very confident, the company's very confident they're going to be able to get the entire fleet to wake up. Sorry for the dogs, they were very excited about the call. They're very excited about turning on the fleet, and they think that this is going to help with regulatory approval because as they feel confident they'll be able to show something that's much safer than a human, and that's all they will need to get approval. It's not just a US code that they're working on. It's a generalized solution that you could plop anywhere on Earth and the car will learn how to drive, just like if I were to go to Ireland and rent a car. I don't drive in Ireland every day, but I can just go there and drive because I understand how driving works. And then he threw some shit to GM about how they canceled their product, not because of they're saying that is regulatory, it's because their product just can't do it. And then the FSD take rate came up as a topic as well. They're seeing encouraging results, but they're still not willing to give us the number. And then they highlighted how 12.5 is a huge game changer, and the CFO had 0 interventions on the latest stack, that it's very, very good. And we talked about Robotaxi. Do you think you can scale the... So Pierre was asking about, can you scale Robotaxi immediately? Like, how long is it going to take to do that? And Elon's answer was, maybe you're not understanding me. So software update turns on the entire fleet. Anybody can add their car to the Tesla app. He thinks that most people want to make money with their car, which means that overnight Tesla will have a much larger fleet than Uber. And so which implies that the current hardware 3 cars will be able to do self-driving. is what I got from that as well, right? Energy pricing strategy. Yeah, so same exact thing that we talked about a little bit earlier. Just, the pricing strategy is good. The differentiator between them and the competition is that they have AI compute, that they have a differentiation from a software perspective. And they think they have a lot of demand with energy because of how much compute is being purchased by a lot of different companies. And compute is very, very power hungry for AI. So they see a lot of runway for more demand. And then, talking about 4680, they're confident that they can ramp up no problem. And then the IRA being cut under Trump, if the $7,500 credit were to go away and some of the battery credits they're getting were to go away, is that going to be an issue? So Elon said it's going to be a short-term impact, but long-term it will probably help Tesla because they're so ahead versus the competition. And again, we heard the usual, everything else is noise. Autonomy is what matters. The bot is what matters. If you don't believe this, you should sell Tesla stock, was a direct quote from Elon Musk. So he's doubling down on the AI portion of it. So, all right. So that's what we got. Those are the notes. What are your thoughts? Who wants to go first? Should we go with Matt Smith since he's got his glasses on now? Go for it, Mr. Smarty Pants.
I was going to lead off just saying, it's pretty nice to see something that you're actually good at. So nice job taking notes. It's unusual.
I'm secretary. Thank you.
Everyone has little skill sets, and it's nice that you found yours. I know you were one of the barnacles that Tess had to scrub off a couple of years ago.
It's my...
But you're a good note taker.
Thank you.
So it was a very interesting call. I mean, a couple tidbits that just spoke out to me. One was him throwing shade at GM was I don't know. I thought that was a little bit of a mic drop moment. Just oh dang, I hadn't thought of what they were doing exactly in that light. Of course, they're just blaming regulators when the problem is that they can't develop the technology. But as soon as he said that, I was like, oh, that's obviously true. Waymo is able to function despite having the same issues that Cruise is blaming on the regulators. So I thought that was just a very kind of eye-opening comment, and I thought it was great that he just threw that shade out there. And then they put the other comment on when the CFO was talking about how he got these intervention-free drives on his way into the in his way into the plant. I just had these memories of Elon saying that exact same thing 5 years ago. And it's people saying they've got an intervention-free drive is not that doesn't move the needle at all in the earnings call. So I kind of just wish there was a little bit more meat on that bone. It sounded like the likelihood of a licensing deal is lower, I guess. I mean, the kind of their enthusiasm, the level of energy they had around that comment was noticeably lower, I would say, than it was on the Q1 call. So all in all, I think it was reasonably kind of as expected. But I'm curious to hear everyone else's thoughts.
Emma, let's go to you.
Yeah, I mean, I think he's towards the end there where he said, sell the stock if you don't think we'll solve autonomy. I think he's really forcing the issue and the narrative change. And it's all about FSD and interventions per mile. That stat is probably the most important stat in the whole company for the whole company's future at this point. And then take rate, obviously, they wouldn't share really metrics on that. But that, to me, signals where's the friction? What's the friction on getting actual customers to actually use it and adopt it and such. So it seems like they're it's just doubling down on betting the company on autonomy, which we sort of all knew, and Elon's been signaling that for a while, and all this other stuff is noise. Yeah, so I think that's the near term next 2 to 4 year future, and then after that it's the bot. So he's just trying to get us all to focus on that narrative going forward. All this gross margin stuff, cogs, all that stuff's kind of noise, and they'll talk about it, but really in Elon's mind it's FSD or nothing.
Nico.
Yeah, let me start off by agreeing with Matt. Farzad, you're great at dictating.
Clearly, we're thinking about that for like 5 minutes before you said the joke. I'm glad it only took you 5 minutes.
All right. Well, that's
That's
fast
what
for
she
me.
said.
Yeah,
he's
I
lucky.
think, like Emmett just said, it's all about FSD, right? That's kind of what I was saying before. That FSD take rate is, or it's all about Robotaxi, not just FSD. He's made it very clear, and that's what I was saying. Like Robotaxi solves all of these problems, and I think it's very clear. I'll humble brag here. I'm 60% to 12.5. Cannot wait till this is 100. I'll be ditching you boys to go and see what the hype's all about. I thought there was Matt, I actually kind of had a different perspective on the licensing. The fact that he said there's several now, not just one, I thought that was pretty encouraging. I thought that was new news. The fact that they said at the end of the year, probably in Europe, China, etc., for FSD. I think you're going to see FSD explode outside of the United States, just like electric vehicles. There's no way every person in China who has a Tesla is not going to immediately. I mean, we are like a microcosm where like everyone is in China. Everyone there is just a techie, you know? So I think that's going to explode. I love the GM digs. In general, I would say it was a pretty boring call. I won't lie. I kind of dozed off a couple times. And that was not because of the mezcal. And then he would say something like, oh, it's October 10th now. Like, oh, okay, great. Like that got me excited. And I would immediately look at the stock. I'm like, oh, okay, they don't care. But I think, boring call, and I'm happy about it. I know we're down right now about 7.75%. That's par for the course. Historically, we're an 8% move. So nothing really there. The one thing I do see is we sold off a lot when we learned that A8 was, or the rumors were out that A8 was going to get canceled. And now that we know it's back on and the date, it's funny to see. It's going to be interesting to see what happens from here. Because to me, that says that there's no reason we shouldn't be going back to 265, because that's the only thing that really changed in that period before earnings came out, was that we learned that it was getting postponed. We didn't have a date. So I think that's interesting to keep an eye on. Again, I'm a long-term investor as always, but the short term is a lot of fun. So,
Hans.
There were a number of things that I enjoyed on the call. So the fact that we finally have like official confirmation that the 1010 event now will be an official product unveil with multiple products that was, a significant piece of like just 100% confirmation. And that the delays on they're allowing for actual improvements to Robotaxi. So I feel like, I don't know if Elon is just taking one for the team on this or if it's true, but usually, if the delays were just that the team was taking too long to get there, I feel like Elon wouldn't have added the commentary about, hey, you know what? If we wait a little bit, we can actually improve what we're going to show you on 8.8. And I felt like that was important enough to actually create this delay for, that you could read that one way or the other, but I felt like there's at least a good chance that we will have an improved event on 1010 compared to what we would have had on 8.8. So that's good. The confirmation of, multiple thousands of Optimus bots, we've heard that before, but it's just great to hear again, like multiple thousands of Optimus bots operating in Tesla factories next year. And then if you layer onto that the commitment by Elon to sell this as an external product pretty much immediately. Like, we're not messing around with saying, hey, we're just going to use it internally for a few years. We're going to really try and build up our advantage as a company because we have this massive lead with labor leverage. But saying, no, like, we want to expose this product to the marketplace as quickly as possible and get the benefit and, all of the challenges that go along with selling a product to customers, as well as the leverage that these other businesses that purchase these products from us, are going to be out just in the wild. I liked that piece. And then the little tidbit on Shanghai megapacks too, that he said, hey, this is going to double, which we kind of knew, capacity of Lathrop, but potentially up to triple. And the plot of land that they have there in Shanghai for that megapack factory is definitely much larger than, you know, what they need for a plant that's the size of Lathrop. And this is kind of, you know, most of the LFP battery cell production in the world exists there in China. And so you would think it would make sense to be able to produce significantly more than that 40 gigawatt hours a year of mega packs in China. So it's great to hear that little tidbit that we might get triple, not just double. And I would assume that that capacity would grow pretty quickly there, which all, you know, when you can layer that on top of all of the commentary that was made later on in the call about the strong demand and the order backlog for Megapack products. And, you know, they pretty much just talked about Western markets, but I can't imagine what the demand in the Chinese market is going to be once this comes online. I would expect it to be very significant. So that should be a big driver for energy profits in the future. And then the commentary that Elon made about we have to make Dojo work and we will make Dojo work. I thought that was another one that was big because, you know, right now Dojo's made decent progress. It's something that they are using, as he confirmed, but they're still having to purchase very, very large clusters of NVIDIA GPUs, and it has actually been a delay to Tesla's plans. And so they say, hey, we need to figure out how to be more competitive. Jensen is a heck of a competitor, and so we need to figure out how to get on his level, and we've got a path to do that. Whether they'll be able to execute on that, I mean, we've kind of heard it before, but I'd love to hear renewed commitment to the vision of really having very, very high quality supercomputer in the form of Dojo. And I can't wait to see what they announce on that front. I think those were the main ones. And then just the last little one was when he talked about really not wanting to Osborne vehicles with the different types of vehicles that they announce for the 1010 event. You know, just kind of a little tease that there may be some really cool stuff. I would love to know what they, you know, what parts of the old manufacturing methods are we keeping versus which parts of the unboxed are we getting on the new manufacturing or the new vehicles. And we didn't really get any color there, but this one piques my interest. I can't wait to see what we see.
Yeah, to me, it's a continuation of Tesla. Just it keeps going harder into this sort of point where those that don't think autonomy is going to work are growing increasingly frustrated with the story because of earnings going down and a lack of clarity around pricing stabilization, demand for electric vehicles. And there is more and more coming out of the company saying that doesn't matter. It's Robotaxi and the bot. It's all AI. And so there's a growing divergence between those two things still. And I'm going to guess it will continue because Q3's margins are probably going to be worse because there was less production in Q2 versus Q1. So there's less scale for those cars that are currently in inventory, right? So there's going to be a growing divergence between those two things, which I think is going to put a lot of pressure on the story and is going to put a lot of pressure on the stock, which is going to grow, which is going to make Tesla's achievement of Robotaxi and the bot more groundbreaking than it is today because of that growing divergence, I think. So that's what I'm getting out of this. It's like the stakes are getting higher as we're going closer and closer to that date happening. The stakes aren't getting small, they're getting higher. They're getting higher. And so the tone of the company is very obviously around that. Is like, we're an AI company, screw you. It's very similar to like back when they were ramping the Model 3 there was a very similar tone out of Elon. Like, it was a lot less polished. Where it was like, these questions are so stupid, you know, because when people were questioning like the profitability of the Model 3 and how the Model 3 was going to ramp, so on and so forth. But we got a much more polished version of that today, which was, y'all are not paying attention to the right thing. It's autonomy or bust. It's AI or bust. And we're doing everything from a company perspective to execute on that. And we don't really care about short-term profits. We don't care about short-term pricing. We just want enough in the bank account to execute on that. And the interesting dynamic between what's happening now and what was happening in 2018 is that from a financial perspective, from a balance sheet perspective, they're a lot more well-positioned than they were previously, because they actually have money in the bank and they're not dependent on banks and from raising capital in the markets to be able to execute against that. So they're working from a much stronger base. It just really comes down to, can they do Robotaxi? Can FSD become unsupervised? And will the bot actually be useful? And those are the questions. And so I think if you're a Tesla investor, that's what you're trying to figure out. Will Robotaxi work? Will FSD go unsupervised? Will the bot be useful? That's it. Those are the three right questions, I think, for a Tesla investor that wants to believe in the AI story. If you're a Tesla investor that wants to believe in the car story and in the profit story, especially in the short to medium term, you're probably like, what the hell is Elon doing? This is crazy. This is crazy, right? But that's just not how the guy works. And we've seen it time and time again. That's where I'm at.
I would agree with that. A lot of it has to do with timelines too. Do you believe Elon's kind of timelines? Sometimes they're very optimistic, you know, or do you think Robotaxi is still 5 years away? You know, it's just a timeline thing as well, I think. And the longer the timeline confidence interval, the higher the chance that something else comes in to kind of disintermediate Tesla on this technology.
Speaking of timelines, he did say he thought, so the question that was posed was, when will the first Robotaxi ride happen? His answer was, well, so that means unsupervised FSD. And he said end of this year. So that'd be interesting to see if we get unsupervised FSD end of year.
Not gonna happen.
Why? Okay, let me push back on you. You say no. We went from 12 in 6 months. We went to hands-free, and when we got 12, you probably been like, no, not hands-free, not that fast. You probably would have said that.
No, you're framing the question incorrectly. So my question would be, show me one time where Elon was on time with the timelines regarding FSD. One time. Right? So it's not this year. What I'm saying is not this year, it's next year. That's what I'm saying. It's like Q1 of next year.
He's been right.
In a very positive scenario.
He's been on time on a lot of things when it comes to FSD. He said before his rollout should happen this weekend, and we get it on that weekend.
How many mezcals did you have?
I'm being honest. I'm not saying that he is accurate more often than not, but I'm saying he has been accurate.
Sooner or later, he will be on time, but who knows when.
I think it's very interesting to hear you say that when even Elon on the call said that he has been overly optimistic.
I'm not denying that. I'm just saying that he has said a correct timeline before when it comes to FSD. He has said that this version should be out at a certain whatever, and he's been right. And people have been like, oh, look at that.
Oh, yeah, that one time. He was like within a week or two, right?
Hey, I'll take it.
FSD V12 coming out. But listen, I think that,
jokes aside, though, jokes aside. So do you think that we'll potentially see like a first Robotaxi or unsupervised this year, early next year?
I don't think we'll see unsupervised Robotaxi this year. I think we'll see it next year. Unsupervised FSD. Sorry, unsupervised FSD. Yeah, unsupervised FSD. So my thing from the very beginning, and I made a video about this early in the year, is like rate of improvement is by far the most important thing. It's like rate of improvement. We have to see now that the AI stuff is on. We need to see each version needs to get significantly better than the previous one faster, and we have seen that. Right? It's not going as fast as I hoped, but we definitely have seen that. 12.4 in my car right now with supervised hands-free is by far the best version I've had. Like, it's not even close. And we went from V12 being launched on a brand new stack to that in a span of 6 months versus the previous 6 years of going from Navigator Autopilot to version 11. And that window of improvement has been significantly better than the other one. So we are seeing that. It's just like, okay, so can you accelerate that? Can you go faster? What will 12.5 do? What will the 5-time parameter increase do? What will hardware 4 do? You know, like so on and so forth. What will AI 5 do? So we need to continue seeing that. And, you know, that's just what it just comes down to execution. This is an execution question. It will happen at some point. Here's the deal. Like, the way I view it is it will happen. The frustrating thing about Tesla is that you never know when it's going to happen, but it's going to happen. It's going to happen. And if they've done that multiple times before, barring some insane outcome where Elon Musk can no longer be at the company, or his ability to execute against large-scale problems that are very difficult and novel cease to exist, which everything points to that not being the case just by the fact of FSD 12 existing in the first place. I think that in Starship working, okay, like these are pretty big signals that say he's still there. So from that perspective, I'm still very confident they'll get it done. I have a car that gets better every single time, literally. So I can see it. It's just the timing of it is the thing that everybody's waiting on. It's like, okay, we're all guessing on the time, but the longer it takes, like I was saying before, the longer it takes and the more divergent the story becomes, because it's obvious that Tesla has a short-term to medium-term issue with pricing and margins and net income, especially as they near the launch of the more affordable vehicle. That story is going to continue to create a divergence. And if they execute on FSD and autonomy and Robotaxi and the bot, I think we'll see a very different shift in the story, because people want it. I think people want to see it. It's just it goes back to my whole thing. It needs to show up on the P&L. It has to show up on the P&L.
Hans?
Well, yeah, I think that I have a hard time believing that it's going to be this year, partly because we only have, like, it's really hard to extrapolate a line off of one point. Like, we only have one base model of FSD version 12 that is in the hands of the fleet. There have been fits and starts with 12.4. It's not in the hands of all the fleet yet. We are now seeing 12.5. Apparently, it can't even go to all hardware 3 vehicles, or at least not right now. We'll see what the timeline is on that. So, like, I want to see 2 different base models go to the entire fleet. That at least gives us 2 points. And then we can kind of extrapolate a line as far as pace of progress. And then we can kind of look forward and see, okay, where does that put us on, miles to intervention or whatever metric you want to use. So the fact that we haven't been able to do that right now is the thing that causes me to have major questions about being able to finish that this year. And maybe, like, if version 5 goes out to pretty much everyone within the next 4 weeks, then that's a really strong positive sign. And I think that puts end of year back on the table potentially. But if version or 12.5 takes longer than that, if we encounter hiccups again, or if it takes 4 months for that to get to hardware 3 or something like that, then I would say it's red flags again as far as just pace of progress, because I don't think that we're going to be able to continue to, like, we can't just continue to increase parameter count. Like, we have to figure out some engineering challenges, whether that's having the larger cluster turned on in Austin, or like there's other things that I think are going to have to happen in order to continue to make progress past 12.6. Well, I mean, it's hard to say because we don't know a whole lot about what 12.6 is. Almost all the detail that we have right now is related to 12.5. So how they, is 12.6 an improvement over 12.5, and how is that an improvement over 12.5? Those are also open questions that will help to make it a little bit more clear what the shape of progress beyond 12.5 would be. So I think that's where my skepticism comes at. What do you think?
Yeah, well, I think Farzad's going to lose his bet to Cindy, and based on what he says, and he's so bearish. You guys heard it here. No, I think, I don't know what I think. I think I'll know something after I test out 12.5. I think if 12.5, if Omar wasn't being hyperbolic. And he said last night, it feels as big of a jump from 11 to 12 is what 12.5 feels like. If that's the case, geez, if they do one or two more updates,
and that's him coming
that,
from 12.4 too, just to give people like Omar wasn't on 12.3.6 like the rest of us plebs. Like he was already on 12.4, so going from 12.4 to 12.5.
So.
Yeah, and then I mean AI driver, dirty Tesla. It's pretty just everybody's saying it's good.
It's not often that we have. I would say going from 11 to 12 was one of the few updates that we received where it was kind of ubiquitous. I was like, oh shit, something's different. And immediately with 12.5, we knew 3 people who had it, and they are all in different parts of the country, and they were all saying, oh shit, something's different. So I'm just saying, if you have, I don't know, like one more of those, 2 more of those, is that enough to get to unsupervised? I don't know. Don't drink the FSD, Nico. Man, someone's got to keep it optimistic around here. I'm watching you guys all sell your stock right now, but it's all right. Because you know what? Statistics are amazing. Look at this, 8.6%. The implied movement was 9%. How freaking amazing is that? You got to love math.
Pretty wild. Go ahead, Hans. Sorry. Or Emmett.
I was going to say this 12.5, that's what I'm watching. I want to see the skeptics who are, the people who are often skeptical comment on it and see what their reviews are. I know people started getting it last night, and so far it's very positive. So that's good. And I can't wait to try it myself and see if it passes the wife test for me, because so far nothing's come close to passing my wife test yet.
I was actually thinking about that, like the different perceptions that different beta testers have, and I was thinking like of this quote from Office Space: every day of my life is worse than the day before it, and that means that every day you see me, that's on the worst day of my life. I feel like that is like Omar's FSD experience, but in reverse. Like every FSD update he gets is the best update ever, and it's like amazing. It's like, as much as I love Omar, but
it should be. If it's getting better, that has to be the case.
Saying how amazing it is, and then like the first time I got FSD, I was like, oh, this is actually like garbage, at least for where I was driving. So I am kind of curious to see if it is as ubiquitous as V12 was, where like literally everybody was like, okay, this is a very major game changer. It's not perfect yet, but like, wow, wild improvements. It seems like with our very kind of limited cohort of like, AI driver and Omar and dirty Tesla seems to be the case, but I think we need a few more proof points to make sure it's not just this is the best day of my life kind of thing from Office Space.
Yeah, I mean, I think the improvements have been there on average, Mm-hmm. My thing is going to be when my dad, because I had my dad on my on one of my videos recently. He's never using it. Well, but here's the deal. I really think I think it's a trust thing. He says it's like, I like to drive, but I don't buy that somebody that drives 150 miles a day, an hour and a half each way in New Jersey actually likes, like, no person, there's no human being that exists that likes to drive. He just likes to say that, I think, because that's another way of saying, I don't trust the machine to take over. I think that's what he's saying. And so I think if he is able to get to a point where he's comfortable with it, I think we're at like 90 to 95% adoption of this thing. I think if my wife is using it all the time, then we're at somewhere between like 25 to 50% adoption, because my wife's younger, she's a little bit more trusting of the technology, but she's not nearly as heavy-handed as I am. So these are like my very stupid data points that I like to use. But I like to use real-world examples, because that's really representative of, like, I try to keep a diverse group of friends for that reason, because it's like I understand the world better if I have a diverse group of friends, because I don't want to like anyway. So I think I want to see 12.5 with my dad. Because if my dad says, yo, this thing is sick on Jersey roads, look out. That's when it gets interesting. Okay. We are 3.5 hours in. Anything else we want to talk about?
Yeah, I was just struck when you were speaking like 20 minutes ago, Farzad, about kind of like continued weakness potentially into Q3. Like I think auto margins are going to continue to compress. I don't think we're going to see another like massive beat on deployments for energy. In fact, it wouldn't surprise me if we decrease a little bit sequentially. I think, like they said, this is a really lumpy business, and I think what we saw in Q2 was a bit of like just luck of the draw, where you had a bunch of projects kind of all get lumped into the quarter, which probably like if it was smoothed out you would have seen more of a ramp over previous quarters. So maybe we only do 7.5 gigawatt hours or something like that on the energy side. So I need to go and kind of adjust my model after this, but it wouldn't surprise me if we see some kind of continued weakness into Q3. But so this kind of contrast between like next 3 months, I don't know, might be a little iffy. We've got the 10/10 event in there. Meanwhile, like look how much compute they're bringing online by the end of the year. Like look how fast their AI updates are rolling out. Like you've got like this short-term, really not impressive piece of the kind of legacy business, as Emmett was talking about, kind of like crashing at the same time with like this crazy pace of improvement that's going on with the AI and everything they're doing with FSD. So it could be interesting. I don't know. My baseline expectation is just for like volatility. It wouldn't surprise me if we see a couple more weeks of kind of sluggish performance on the stock. Not a prediction or anything, but then I think at some point, like people are going to remember that there's this 10/10 event, and I think people will get excited again.
Well, definitely not financial advice here because I suck at trading options, especially don't really want to air my dirty laundry in front of Emmett, who's so good at this. But so I sold calls right before the big run up, which would have done great if I just kind of held on to them. And just as a forewarning on how not great at this I am, but I actually did. I had a 2026 leap with a 400 strike price that I sold this last week while the stock was trading above 260 after the first little nosedive. And I'm hoping to, cost average that down and be able to pick up a 300 strike or below strike for less than I sold the 400 strike for. Just like it seems so frothy and bubbly right there at that 260 range. And this doesn't at all surprise me that we're trading down, and I wouldn't be surprised to see the stock down in the 200s, maybe even below here over the next couple of months. And so I was like, I felt really good about the gains that I had on that leap and wanted to be a little bit strategic with the short-term play. And it's just one leap, it's tiny little play money on the side of the overall portfolio. But just a little context for viewers of where I'm at on what I think the movement of the stock price in the short term looks like.
Anyone else want to add anything?
So internationally, China, it seems like they're making a big play. Tom Shu is back in China running things there and stuff, I think. And it seems like they're making a big play to get back on track there, especially maybe with the imminent FSD rollout there. So I'm hopeful there. What about other parts of the world, like Europe, or do you think even like the Middle East or something that, FSD is going to roll out? Any other countries it rolls out even before the US potentially because of regulations maybe clamping down too much here?
Australia.
Yeah, I mean, I think they're probably going to go wherever they allow them to. I think China is going to be a big one. I mean, I think they're going to be able to do China relatively easily, relative to like Europe. I think Europe's going to be a pain in the ass. It will take a while. But I mean, if it's approved in China and the United States, it's just a matter of time. So for me, it's like the question of like, okay, when is Europe coming is like irrelevant because it will come at some point. And if it doesn't come, then it will come to every other continent before Europe. And
I mean, what do you think about like the Middle East, for example? Do you know what the difference between like the people in Dubai and the people in Abu Dhabi is?
Is that a joke or?
The people in Dubai don't watch the Flintstones, but the people in Abu Dhabi do.
That joke. 4.7 out of 10. Not bad. Actually, kind of
I
below
tried to
average.
set that one up, but
That's okay. I'm like, the way you were asking the question, I thought it was like, were you gonna like drop some like financial knowledge or something? And I'm like, wait, this is a joke. Yeah. I mean, I think, to me, it's like if they're wise, they would go to the places with the highest population density, and that's going to be obviously China. So
India.
And India, that's a big one. That's a
Crazy.
The infrastructure there might be an issue, but
a little bit.
Yeah, a little bit, but I'm sure they'll figure it out. But it's going to be interesting.
Korea,
I mean, it's
the number one retail stock owned in South Korea is Tesla, and it's very high density, very popular there. I wonder if something could happen there, maybe.
Yeah, very heavy culture too. Like that's a pretty good candidate, I think.
Let's just start with Florida. How about that?
I do think. I mean, this is the kind of technology that, like, if you really think about what do the roads look like in a world with self-driving cars. When I heard Dave Lee talking about this, it really like made my light bulb go off. It's like, you're gonna have thousands of robotaxi looking things, like cyber looking things, like pretty futuristic, dominating the look of a city, because the product is going to be such a no-brainer from a cost and safety and feature set perspective that there's going to be so many of them on the road at some point that it will become a part of the culture for that place. So like, say you visit Austin, Texas in 2030, and all you see in downtown Austin, like 80% of them is, 20% is going to be, F-150s that are taller than a freaking skyscraper. And the other 80% is going to be freaking cyber cabs rolling around. You don't think that's going to stick out? That's going to be a thing that people are going to notice. And when people are traveling around the different cities that happen, it's going to, holy crap, this thing's happening. This thing's crazy. That's going to drive adoption in some form.
Well, I think that was another interesting comment from the call, is like FSD is going to be a demand lever at some point. Like, I think we conditioned ourselves based on the last 5 years to think of like, okay, what's going to be the number of sales, and then what's going to be the take rate of FSD on those sales. And we're kind of like thinking of it in that type of funnel. But I think what's going to happen, to your point, Farzad, is like, you'll be driving people around and they'll be like, oh my, like your car drives itself, and like they'll buy a Tesla for that reason. That's a phenomenon we definitely haven't seen yet, but like it's only a matter of time, I think, especially given how affordable these are now. I think FSD as a demand pull is like something that could kind of save the day on the demand story in the not too distant future. It's not there yet, but if 12.5 is good enough, then it wouldn't surprise me if we have a couple quarters after that we start seeing some evidence of that.
On that note, I got to go live in the future, guys. So I'll catch you guys later.
Let us know.
Farzad,
12.
Thank you.
Drop your thoughts in X. I'll retweet them.
I will. By the way, just random thought. Don't cut your hair. It actually looks good. Like on your side profile, it works. Yeah.
Which way? This way or this way?
No, the other. No, the other way. Yeah, there you go.
Is this my good side?
I mean, fix the face stuff, but yeah, looks good.
Goodbye.
Later.
Bye. All right. Thank you, Nick. So he's gonna go drive 12.5. He just got it, and I just got a message on Discord from my friend that also got 12.5. So looks like a fair number of people are getting it right now. Okay. Any parting thoughts before we wrap it up?
I got one. Why did the Tesla with full self-driving break up with its girlfriend?
Why?
Because it wanted to be more self-driving.
That's a 0 out of 10, Emmett. I've never given a 0 out of 10 before.
For a dad joke for full self-driving Teslas, and that's what it came up with.
First and last time. That would be my recommendation. Wow, I've never given a 0 out of 10 before, Emmett. Congratulations. You have a very unique honor.
I got more. I got more if you need them.
Please no. All right. Thank you so much, everybody, for joining. For joining the call. All right. No, for real. Any last thoughts? Any last thoughts before we wrap it up? Let's see.
I think we're good.
We're good. Thanks, Farzad, for putting this on. All right.
Thank you, Emmett, for just bringing this podcast to a close. Actually, give us one more. Give us one more. This better be good. This is how we'll end it. Go for it. This is risky.
Why did the Tesla with full self-driving get a job at the pizza place?
So that it can do deliveries for free.
I because it heard they were hiring autonomous delivery drivers.
That's not even a joke.
That's just a statement of fact. Okay, goodbye.
That's Grok 1.0
This is
for you.
nope. I'm not gonna let my channel tank for this. Goodbye,
Why
everybody.
did the car